Volatility, back ratio revolution, create maximum returns with minimal risk. My name is Don Kaufman, and you are watching a TheoTrade presentation. To risk disclosure, we're not financial advisors nor a broker-dealer here at TheoTrade. I spent about 15 years in the brokerage world, which I'll discuss here momentarily, but I'm out. I'm out of the contest. Next on the docket here, a copyright disclaimer. This is ours. This is not yours. I also want to let everybody know right now, and this is always an important thing, at least for me, and I think it should be important to you. If you ever need to get a hold of any of us here at TheoTrade or myself, just go right here, support@theotrade.com. Just put Don in the heading. That email will go right to me. So by all means, please contact us in the future. We're fine with that. We get hundreds and hundreds of emails every single day. So we're big about email and support here. So by all means, you need something, shoot us an email at any point in time. Again, we're based right up in North Scottsdale. All right, getting down to it. This is why you're here. Okay? Listen. You're going to spend the next approximately hour and a half. And I am going to go about an hour and a half tonight. Is that all right with everybody? Because every time I do a presentation, I'm always adding things in here. This is going to get a little intense tonight, too. So I want you guys to be able to walk away anytime I do a broadcast. And I always say there's something definitive, something that you can actually use, an understanding, okay, that can be applicable to the marketplace tomorrow. So let me actually go through some of the specifics of this evening. First and foremost, you're going to learn right here where edge actually lies in the markets today. And more importantly, the strategy that turns the edge into potential profit. Number two, find one strategy with the potential for mass returns with minimal risk. I'm actually going to show you many trades that have actually executed over just the last couple of months. By the way, I'll always show you the most recent trades possible. And I mean, I've got trades that even executed literally today that I will actually bring up here. Number three, discover how you can reduce risk of your portfolio, regardless if you're long or short. So we're actually going to show you a strategy that can be used for risk reduction, which is also what we term a hedge. If you're unfamiliar with the term hedge, it's about risk reduction. Number four, determine how one strategy can help you in creating high return to risk ratio, even the most extreme bullish or bearish markets. And then, of course, number five, what are the right steps to take whether you're trading or investing? One thing that I'm going to key in tonight, this can actually be used as a trade or more as an investment grade strategy. And I'll reiterate that. And I think that that's important, okay, that I reiterate that. I don't necessarily, assume that everybody in here is, active trader that sits in front of the computer all day long. I don't mind saying this. I do. Okay. I grew up in this industry and I absolutely sit in front of the computer throughout the course of pretty much every trading session for the last 22 years, but not everybody does that. And if you're an investor and you're just looking for good investments, maybe you need a hedge, I'm actually going to help you with that as well. So again, we're actually going to hit both sides of the equation tonight. Before we get, off and deeply rolling into this, our gift to you, stay with me this evening right until the end of the webcast. We are going to provide to you the auto expected move indicator. So before I even get into anything tonight, we're going to give you, okay, an indicator that I consider it's the staple behind what I do, the auto expected move. And I talk about it for any of you that have ever caught the videos that we've done, maybe on YouTube. I'm always referencing like an auto expected move indicator or what we call expected move. And I'll explain expected move if you're brand new, okay? We're going to give you the indicator. The reason that we do this, I'm going to refer to the auto expected move indicator all throughout the presentation, okay? And in referencing the auto expected move indicator, it wouldn't be right if we didn't, provide that particular indicator to you. As I said, I want you guys to walk away with something definitive. If you're going to spend an hour and a half of your life, with me here, you need something, okay, that you can use. And that's what this auto expected move indicator is going to be. It has a $497 value. It is the single most advanced indicator ever compiled. It's an indicator that's literally going to change the way that you view the markets. I'll actually show you a little bit about what it entails, what it looks like, without going into too much detail and reading you this over here. Listen, This is the, right up here, it's the IWM. What's the IWM? Okay, it's the Russell. Okay, it's the rut. The three lines, what those three lines indicate, it's what the option markets is depicting risk to be this particular week. But again, it projects forward. So every Friday, it's telling you what the risk is going to be for the following week. Now, this indicator is not, okay, looking at any past data. It doesn't do that. It uses the option marketplace, again, to handicap risk. So what it says, option markets, okay, deliver you incredible information. What this indicator does is it says, we're only supposed to be in this range. That's what we call a normal range. They're derived from the options chain, okay? And what happens is things happen that can be abnormal. You can see them visually with this indicator. You can see what we term breaches of expected move. You will understand this, okay, in infinitely more detail in just the next 10 minutes. It's like exactly the place that we're headed first, is to explain a little bit more about this. But it's critical that, again, we're going to reference this indicator throughout the course of the evening. Okay, I will provide you a link right at the end of the webcast, and that link will give you access to the auto expected move indicator. And again, we'll explain that here momentarily. Also, I know a lot more people just popped on over here, so I will absolutely do a little housekeeping. Listen, tonight, this is skill set, okay? And I don't mind ever saying this. I will challenge each and every one of you. I am of the belief that if you have spent your time here, you want to spend time here and, not looking at red and green flashing arrows and, bright colored lights. You're going to learn something tonight. And I'm telling you right now, shut the door, turn off Skype, chat, whatever else is distracting you. Close Facebook, put your phones on silent mode. Definitely kick out kids, grandkids, okay? Whatever you got that's distracting you. The dog's all good with me, okay? The dog is good to go. But in all seriousness, you took the time to be here. This is important. Focus on being here, because we're really going to ramp this up a bit this evening. That all right with everybody? Good? Maybe? Possibly? Let's do this. Here's a little bit about me. I watched order flow for 15 years. That is in large part why I am here. So I'll give you guys, again, a little bit of background on myself, a little background how we actually came about launching TheoTrade. Then we're going to jump head on into this. So some background on me. I grew up around traders, market makers, and the story kind of goes like this. In the 1970s, my uncle, he was invited to trade in Chicago. He was a mathematician, pretty sharp guy. He was invited to trade in Chicago in 1976, and a firm had actually leased him a seat on the floor in 76. By 1983, he had taken one seat. Then he turned around and actually had purchased over 500 seats on exchanges worldwide. And he built one of the most prolific trading firms ever. It was called O'Connor & Associates. So by 83, he kind of hung it up a little bit. Only literally 7 years after starting, he moves out to Paradise Valley in Scottsdale, Arizona, and actually runs the firm kind of remotely. In 1992, he actually sold the firm. It was a multi-billion-dollar deal. It was actually sold to UBS. It was actually Swiss Bank at the time, which eventually became UBS. And, I saw this as a kid. I only started trading in the late 90s. I phoned in, to him, and I said, listen, I'm kind of interested in the marketplace. And he's like, kid, come on out to Chicago. All I did was go to Chicago 3 weeks outside of college and had no intent of really staying. I was interested in it, but I was going to medical school. So 3 weeks outside of college, I went to Chicago, and I never left. I never left until I hung it up and got out of Chicago. But I started trading in the late 90s in Chicago for a firm. They moved me upstairs almost immediately as a derivatives risk manager. I spent the next almost 3 years until I was invited. Some guys I knew were starting up a brokerage firm, and I was actually invited, kid of all of 24 years old, was invited to work at a firm called Thinkorswim. And I went to work for him in 2001. That was kind of my official start date. I think I was employee number 13 of Thinkorswim. And I went on to actually build the entire education division of Thinkorswim. I was also on the executive team of Thinkorswim when we took the company public in 2007. The firm went on to be acquired by TD Ameritrade in 2009. At that point, I went on to run education for all of TD Ameritrade, and we had about 7 million clients at the time. I held that position from 2009 to roughly 2015, where I decided to hang it up and exit TD Ameritrade and the registered rep world. So that actually brought us, of course, to none other than TheoTrade. And the entire time I was at TD Ameritrade, I got to see everything. Both Thinkorswim and TD Ameritrade, which had the largest order flow in the entire industry, we got to see, when I say literally everything, we got to see what everybody else was doing. And more importantly, the fact that I actually ran the education division, we got to study what everybody else did. We actually looked literally at millions and millions of trades, okay, and ran all kinds of big data analysis on there. We would literally say, we'd query, like, if you did a covered call, what was the, the viability of a covered call? For those of you who know about an iron condor, I used to do all kinds of studies about iron condors, vertical spreads. If you knew anything about options, we studied you. If you ever traded options at Thinkorswim or TD Ameritrade in the last, almost 20 years, we studied you. And that's in very large part where all that data amounted to. It's right here at TheoTrade. Okay, what you learn here, okay, comes from watching billions and others' mistakes and the knowledge, though, of what has worked best for retail traders. And that's a little background on me, and that's kind of how I, came about, and it's how we kind of launched TheoTrade. So I do media appearances from time to time. This is actually TD Ameritrade TV. We still have a wonderful relationship with TD Ameritrade. By the way, we have a relationship with TD Ameritrade, but of course, they've been now purchased by Charles Schwab. So we have a relationship there. We have a relationship with Tastyworks. We have a relationship with E-Trade. Okay, you name a major brokerage firm on the street, pretty much know people there. So this is TD Ameritrade TV almost a year ago to the day. It's the last time I was actually in the Chicago area. I don't know if I mentioned this yet, but somewhere along the lines, I had decided that living in Chicago, February really sucked. So I decided to move out where the rest of my family was, out in Scottsdale, Arizona. And I've been here on and off like ever since. I'm up in the mountains right now, just outside Scottsdale, about an hour and a half outside of that. Anyway, so I still fly into Chicago, used to fly into Chicago periodically for a couple of media appearances. I'll do CNBC from time to time. This is obviously one of the more memorable CNBC appearances because they pitted me against the shark Mr. Wonderful himself. Let's get into it. We're going through an incredibly difficult time. I say that, okay, but people are going through an incredibly difficult time. The markets, okay, markets are sheer chaos. Markets are up every single day. Everybody's like, this feels good. The one thing, though, that has not died down in this marketplace is volatility. The volatility has not died down. And people, volatility is very, very good thing. And I can't begin to stress that enough, that the chaos that's unfolding around us, okay? And when I talk about the chaos unfolding, you haven't seen anything yet. I mean, right now, for those of you that speak geek, the volatility is already amplifying for the election at an extraordinarily rapid rate just in the last 2 weeks. Very few people are catching that. You got to keep in mind, volatility is a very good thing. One other aspect I wanted to bring to your attention, and this is something that a lot of people do not look at to further that, where volatility is a very good thing, okay? Here's about a year ago. This is TD Ameritrade. Okay, a year ago, they were doing approximately 900,000 trades a day. Now, commissions went free right here. Okay, so they were doing 900,000 trades, a day. Commissions went free. They jumped to 1 million trades. By December, they're doing 1.1 million. By January, they're doing a 1.4. So free commissions started to catch on. Coronavirus hit. Okay, it's unbelievable. They're averaging right now, by the way, these statistics just came out literally a few days ago. They're averaging, 3.7 million trades right now a day at TD Ameritrade. There are shocking numbers. Some of the numbers from E-Trade, Robinhood, Charles Schwab, every major brokerage firm. People, okay? This is it for the retail the opportunity. Okay? This is the haven right now of trading. It is absolutely no one has ever seen volume like the retail world is pushing right now. Okay, retail is driving this marketplace because the professionals, okay, they're not trading. Their volumes are down. The retail world is flying right now. You got to realize all of this amounts to, it's your opportunity. This is the retail time to shine in this business. Listen, we're going to talk about tonight. This monkey, and I'm referencing to myself, this monkey, I'm a volatility trader. I've always been a volatility trader, okay? I grew up as a volatility trader, okay? And you're going to learn tonight specifically about that. And I say, this monkey knows volatility trades, and so should you. Let's get into it. Volatility. Let's actually start to talk a little bit about volatility and kind of prep you for this. So right off the bat, you need to understand volatility is the Wall Street soft word for risk. You know, nobody likes to come in there like, oh man, this market is volatile. That still sounds better than this market is risky. Like nobody likes the that phrase in there, but volatility is synonymous with risk. Now, when it comes down to it, okay, you think about volatility. What do most people think when they think volatility? Come on, we're gonna make this interactive session. I'm not gonna sit here and talk for an hour and a half. We're gonna make sure everybody's alive and well and with us. Okay, when you think of volatility, what do you think of? Anybody? Okay. Come on. Not rhetorical questions. Jump in here. What is vol? Nobody wants to take a shot. All right. There we go. Okay. I like that one. Swings in the marketplace, big price swings. So most people, when they think of volatility, all right, they absolutely think of what? Price fluctuation. The more it fluctuates, the more volatile it is. We're actually going to look at this a little differently to begin with. Okay. Volatility. And the volatility that we're going to talk about, okay, has everything to do with option markets, okay? And what volatility really does, okay, when it comes down to, it literally puts a price tag on risk. That's what volatility is about in the options world. Now, I said the O word. Listen, I am not here tonight, okay, to shove options down your throat. I'm not here to shove options down your throat. I trade options. I started with that tonight. I trade options. I'm going to show you lots of option trades tonight. That's okay. All I want you to understand that is in this marketplace, okay? This marketplace we're in right now, those options are actually driving a huge amount of the order flow, meaning that the option market is actually driving stocks today. And that's something that's just not well understood. And that the option marketplace, okay, can help you understand what stock is going to do. So I cannot stress this enough when we start talking about, volatility. You got to think of volatility, and people talk about high volatility and low volatility, or better yet, they talk about something called the VIX. Most people just don't even know what the VIX happens to effectively be, right? So let me just give you a quick example. For those of you that understand options, great. If you don't, here, I'm going to give you a quick example here. We have a stock, and let's say the stock, okay, is trading at 200. So if the stock's trading at 200, you have, okay, what we're going to call a 200 strike call. What's a 200 call give you the right to do? It gives you the right to buy the stock at 200. That 200 call, let's say, is trading for $4. Why is it trading for $4? Because it's good for 1 week of time, right? A couple things I want to just denote over here, right? And this is not going to be a long discussion about options. All we have to do is understand a couple, okay, of just finite kind of ideas. I'm just going to move forward from there. All I want you to understand, okay, this is not trading the stock. We're going to look at this 200 call because the 200 call gives us the right, okay, to buy the stock at what price? At 200. And we have to pay $4 for that, right? Why do we have to pay $4? We have to pay $4 for it for a week, okay? Because that's like opportunity costs. It's opportunity cost. But here's the whole thing. So this 200 call gives you the right to buy the stock at 200. If you buy a 200 call where do you want the stock to go? Boom! You want that stock to go up to like 210. Because if you have the right to buy the stock at 200, everybody else in the world has to pay what for it? Okay, let's say 210. So what do you actually make on this? Well, what's a 200 call worth with the stock trading at 210? You guys tell me. Okay, what's a 200 call worth when the stock is trading at 210? Not how much you're going to make. What's it going to be worth? Well, if you have the right to buy the stock at 200 and everybody else in the world has to go out there and they have to pay 210, that 200 call is going to jump from $4. It's going to jump up to what in price? At least $10. At least $10. Okay. Now that's not necessarily the most massive gain ever, but all I want you to understand, okay, is the idea of this 200 call, that you don't necessarily have to go out there and buy the stock. Now, okay, the real question comes in this. You have a 200 call, and the 200 call is trading for $4. Here's the bigger question. Why is the 200 call trading for $4? Why is it trading for $4? Because here's what people don't understand about options, okay? And this is what, again, I always want people to be able to walk away with something definitive. Why are options priced the way they are? Some people will tell you it's time, okay? Because the option is good for 1 week, all right? That's why it's trading for $4. Other people will say, it's this, it's that. In the end, it's just supply and demand. The marketplace, millions and millions of market participants drive price. That price defines what? Okay? Defines what the stock is capable of doing. That's the part that people don't get. All right? If you have a stock, okay, think of a stock that's just wildly risky. What's going to happen to option price in wildly risky stocks? Okay, what's a risky stock? Tesla's a risky stock. What else is a risky stock out there? Huh? Anybody? RNA. So that's beyond a risky stock, right? What else is a risky? I can go on for like a half an hour. I like that Lyft. Oh, American Airlines. How could I ever forget? Okay, UAL. All right, these are all incredibly, like RCL, Royal Caribbean. These are risky stocks because they might not be around. The point that I want to make with this, okay, it's the risk. Supply and demand, okay, and risk are also the same thing. So when you look at this 200 call, you look at that 200 call and it's trading right for $4, okay, you want to know who sets that price? It's not Black-Scholes and, Fisher Black and Myron Scholes and they won a Nobel Prize. It's not that. In the end, it's all about supply and demand, okay? And what's volatility been lately? It's been high. It's been really high. Versus like the last 10 years. So you understand that options pricing right now is high. And you're going through all this and you're like, oh, great, man, that's just wonderful. What can it do for you? What can it do for you? Okay, I'm going to tell you exactly what it could do for you. Once you understand, and I'm just going to throw everything up here. Once you understand, all right, what volatility really is, and see this volatility right here is at 20%. Once you understand what that volatility is, volatility can be extrapolated, okay, into stock price movement. So you're like, what? Okay. What I'm basically saying, well, I'm going to literally say it. Option markets, okay, define what the stock is capable of doing. Let's say that again. Option markets define, okay, this volatility is derived from what? From options. Okay? The options are defining the 20% volatility. If you have a volatility of 20%, what does it really mean? Okay? Here is a stock. Okay? By the way, every fictitious stock that I create, I don't call it stock. I call it, okay, stock. Okay? So if I ever take another company public, that's going to be our symbol. Stock. Okay, so stock. You take a look at stock, and stock is trading right at 100, and it has a volatility of 20%. What that volatility equates to, it means that that stock can move what? Up about 20% or down about 20%. Now, what's 20% of 100? It's $20. Okay, so what this is basically saying is we can move up $20 or down $20. And we're going to stay in that range. And this is the important part. We're going to stay in this range 68% of the time. And I just pulled the 68% of the time out of thin air. I didn't. That's what we term one standard deviation. Again, one standard deviation. What's one standard deviation? Is 68% of all occurrences. And to refresh people, because not everybody in here took statistics, and if you did take statistics, you're like, I remember falling asleep in that class. It was that kind of class, right? Listen, 68% of all occurrences. Pretty much in life, everything can fall into a standard deviation curve. I mean, and I always use equate there's really, really good drivers, but they're few and far between. Then there's really, really bad drivers. Then there's Los Angeles, right? So good drivers, bad drivers. But most of us fall into the meat of the curve. I poked a little fun there at Los Angeles. Hey, I've lived there before. No one can drive. That's because they're from all over the place. Anyway, it's just a bell-shaped curve. And we say 68% of all occurrences. What it means is 68% of the time, we're supposed to be, we'll call this the happy place. Okay? It's the happy place to actually hang out in here. Now, what the option market does, the option market's pretty good at doing this. Option markets are handicapping how far the stock is supposed to move. But you need to know something. See that volatility? That's good for 1 year. So if the volatility says 20%, it means the stock is supposed to move up 20% or down 20%, but it's supposed to stay in that 1 year from now. You're like, ugh, 1 year? Okay. Well, I got to wait a year for this crap? Nah. See, here's the thing. Volatility is always good for 1 year. But, okay, let's say I need to know how far this stock can move in 1 week. Could I figure it out? Of course. Of course I can figure it out. Okay, you take the 20%, do a little dance, make a little love, get down tonight. Take the 20%, multiply it by what? 1 week, which is 7 days, the square root of that. Okay, over the square root of 365 times that multiplied by ultimately the stock price. In this case, is 100, and that's actually the expected move formula. Okay, and I just rambled it out over there in 2 seconds. You don't need that crap. Okay, all I want to show you is I could figure out how far the stock can move in a couple of days, how far the stock can move. Do you think that that's pertinent information? Okay, because this is something that has been going on in the market making side of the business since the 1970s. Pretty much since options have been around, market makers have always used options to handicap stock price movement. Most people that don't know options, they don't even know this stuff exists. They have no clue that it exists. And you're actually going to learn, it's not just about oh, well, how's this going to help me? Seriously, how's it going to help me? So what? The stock goes up or down $20. How's that going to help me? Okay, that's exactly what we're going to get to. There's edge in here. There's trades in here. There's money to be made, especially right now, because markets are chaotic. And that's what's being missed, okay, by a large population of traders in the marketplace, pretty much the entire population of traders in the marketplace. They don't know what to do with this stuff, okay? This is what we term expected moves. You give me a stock, you give me the options, I'll tell you how far the stock can move within a given period of time, okay? And it'll be right 68% of the time. Now, as I was saying a moment ago, okay, we're going to use Tesla for an example. Just real quick, Tesla, okay? Now, how many of you recognize this screenshot? That screenshot is taken from what trading application? Anybody? So this screenshot, what trading application is this screenshot taken from? Okay. There are more people trading on this application than on any other trading application in the world. This is actually, okay, Thinkorswim. Okay. And this is where I worked and helped build a lot of the equations on here, including one of my babies is expected move. So when you take a look at the expected move, we spent literally years on this. And I say we, it's not just me. This is an entire team that helped build some of the equations for expected move in here. So you don't have to trade on Thinkorswim. Okay. We use Thinkorswim. We use Tastyworks right now. We're happy with both. I show you Thinkorswim because obviously there's a comfortability with me there. You know, again, I spent 15 years of my life, literally 15 years of my life working on this thing from basically 2001 to, 2015 when we started TheoTrade. But this is Tesla. And everybody's like, if I ask you for volatile stock, you give me Tesla. What I want you to see, this screenshot was taken today. There's Tesla. It was up $85 today. I mean, this was middle of the day, okay, or mid-morning. What I want you to see is the expirations. This is 1 day. This is 8 days. This is 15 days. This is 22 days. Listen, some of you don't know options. There's options good for 1 day, for 8 days, for 15 days, for 22 days. You give me a time frame. I can tell you how far the stock can move within that time frame. Did you know that in the next 22 days, the Tesla is supposed to move, okay, $235? Time out. Does that help you? You're like, I don't know. I'm a little confused on this front. Okay. How am I going to use this? There's a ton of different ways to use this, but think about this. You go out like 64 days. You realize 64 days from now, that thing is expected to move. That's why they call it EM, expected move. It's $500. It's plus or minus $500. Think about this on a standard distribution curve. Here's Tesla right now trading at 1,600. 64 days from now, it's supposed to go up $500 or down $500, and you're like, is it going to stay in that range? Yeah, about 68% of the time. Okay. Now, this is incredibly useful information. We're going to get to how to actually use this tonight, like in context. And that's why, I'm spending a bit of time on this. But I have an even cooler thing. I started off tonight, and I said to you guys, we're going to give you an indicator that takes this and makes it into this. Now you can visually see it. This is auto expected move. What it does with the auto expected move, it takes all of these numbers and plots them on the chart. It takes a 1 week. It takes look, right there, see that? It takes that 1 week, right there, the $165, okay? And it actually plots it onto a chart. Because the thing that everybody asks me about this, they go, it's supposed to happen 68% of the time. Does that crap work? Well, here, this is how you figure it out. Look, this one stayed inside. This one stayed inside. This one stayed inside. This one stayed inside. This one outside. This one inside. This one inside. Outside. Outside. Inside. 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 Outside. But this week is not over. Okay. This one inside. Inside. Outside. Outside. Inside. Outside. Outside. If you actually go back, though, and calculate it for like a few years, you're going to find out that 68% of all occurrences are going to happen in that standard deviation. We having fun yet? You're like, okay, how am I going to use this? How am I going to use this? Yeah, we're getting there. I just wanted to show you that Tesla, okay, which is the beast of all beasts, isn't such a beast when you start to look at it from an expected move. Okay? It's doing wild things on a day-to-day basis. But it's doing exactly what it was expected to do the last couple of weeks. Okay, this week's a little crazy. But look at this. 1, 2, 3, 4 weeks in a row inside the expected move. Okay? Back here it had 1, 2, 3, 4. Okay, 4 weeks in a row. Then it cracks outside. Then 1, 2, and then it cracks outside. And it just goes on and on and on like this. People, okay, 68% of occurrences. The thing about Tesla is it's not abnormal at all. Tesla is adhering to the volatility standards set forth. So you start and you look at this and you're like, this sounds pretty good. What do you do with it? Sounds cool. Sounds like a real party. How do you use it? That's what we have to put into context is we're going to take, okay, this, we're going to figure out how to make money from it. Listen, understanding implied volatility, step in the right direction. It is, okay, but we're not home yet because the whole key is this, all right? It's right here. Has this stuff actually translate to profits? Okay, has it translate to profits? And more importantly, I'm going to bring you into a trading concept less than literally 1% of market participants are aware exists. Now, I also want to quantify something. I will use statistics from time to time this evening. This particular statistic over here, when I say less than 1%, okay, that actually comes from about 5 years ago because I can tell you, okay, listen, I worked at the brokerage firm, had access to everything with the largest client order flow in this industry. The buck stops here. I know exactly what people look at and know where, I mean, if you've ever been on the Thinkorswim platform, we know every habit, okay, that you would have on the Thinkorswim platform. People, we could tell, okay, to just to give you an idea about the analytics of a retail trading application, I could actually tell how many mouse movements you made in a given day. We know everything about you. Everything. Okay, habits. You could pretty much tell when somebody left their screen to go get a cup of coffee and to come back to their computer. You can see how many charts they pulled in a day, how many option chains they pulled in a day. Okay, it is a phenomenal data set. And it goes into being able to build the strategies that I'm about to show you. Listen, 1%, okay, less than 1% of market participants are aware this exists. Even less figure out how to actually trade these concepts. Know your volatility. So the concept that I'm going to show you here, this is actually fairly common. Then we're actually going to go into the trades themselves. That's where people, they don't get it. There's two types of volatility that you got to understand. Okay, there's implied volatility. Implied volatility. That's option pricing. Then his historical volatility. Historical volatility is actual price movement. So implied volatility, that's what we were showing you a second ago. Okay, and when I say implied volatility, we're talking really about expected move. Okay, if the expected move says we're supposed to move plus or minus, like on Tesla, $235. So we're supposed to move $235. But the actual movement is $382. Okay? Is there a trade in here? I don't know. Is there a trade in there? If expected move says, we're supposed to move 235, but instead we actually move 382, is there a trade in there? You better believe it. Because this is what it's about. All right? Historical volatility is actual price movement. Implied volatility is implication of forward risk. If, okay, one of these is exceeding the other or vice versa, there is a huge edge in there. That's what we're going to do. We're actually going to find the edge, and we're going to be finding the edge right now. What if markets, okay, what if markets continually move big? However, options do just a poor job of pricing in those larger moves. How could we go about finding stocks that are moving more than what the options market expected? Remember, again, you have this expected move, and let's say the expected move, so let's tame it down. The expected move, okay, you're supposed to have this $30 expected move. So you're supposed to go up, what, $30 or down $30, right? And instead of moving $30, we move 40, or instead of moving, $30, we move down 50, okay? How can we actually go about finding, if you will, more than expected? Well, that's enter the expected moves. Auto expected moves, they can visually display a stock or ETF smashing through what the options marketplace expected. In other words, you can see a stock moving beyond what the options market has priced movement to be. Does this make sense to everybody? Okay? Does it make sense? Because I'm going to show you now, okay, is the IWM. And I was talking about this a little bit earlier, but let's actually get into a bit of detail here on the IWM. So the IWM is none other than, it's the Russell, okay, which I call the rut. So it's the IWM. It's the rut. And what I wanted to show you, so obviously right here, this is back in the March timeframe. That's the Corona crash. And what's the crash? Okay, what signifies the crash? Look at this, breach. Okay, inside, breach, hideous breach, pop to the upside, breach. Okay, almost every single week is just wildness. It's chaos. See, the thing that you have to understand that's going on right now in the markets, but you got to know where to look. The idea of the IWM, it should stay inside the expected move 68% of the time. But in recent weeks, and more appropriately, recent months, it's been smashing through the expected move, making the opportunities just massive. Just so we're clear, this is this week. Last week, huge breach. It was calm. Okay, this is actually a breach. It was calm before. That's a breach. Okay, it was calm. Okay, this is a little breach over here, humongous breach. There's a breach to the upside over here. This one's a breach. This is a breach. This is a breach. This is a breach. Okay, that is ridiculous. It was calm. It was calm. Huge breach. Do you realize how many zeros are on here? Do you think that equates to 68% of the time? Not even close. Okay, what you have here is a marketplace that is not adhering to what it's supposed to do. You have a marketplace that's actually showing, okay, that it's literally ripping apart at the seams. One of the most amazing opportunities afforded to clientele right now, okay, that's being largely missed. The options marketplace is not doing a good job of handicapping risk. If you don't believe it, I'm giving you the auto expected move indicator tonight. Okay? You look at it for yourself. Every single breach of expected move is opportunistic. Every single breach of expected move is opportunistic, and that is what is being missed right now. Okay? These are the outliers. It's volatility limbo. It's all about risk. Listen, the implied volatility opportunities. If you've had some losses, okay, you got to shake them off. People are still scared of what they saw happen back in February, March, April. The bounce ensued, okay? But you shake off the losses, and people are timid right now, okay, with what they're doing in the marketplace. Some of you are probably taking way too much risk, but generally speaking, okay, there are very few opportunities in this business that present themselves as prevalently as what we're going to witness following the Corona crash and all of the fallout. Okay? You need to get ready for this stuff now because we appear, okay, to only be at the tip of what we're seeing in here. When I say that, okay, these outlier moves, they're just happening with unbelievable consistency. There's outlier moves to the upside, outlier moves to the downside. It's nonstop, okay? And again, you got to position yourself and position your portfolio for a constant big move. So let's get down and dirty. How do you position yourself, okay, for the possibility of extreme movements, but without exposing yourself to drastic risks? And don't get cute, okay? There is potentially huge billions up for grabs, right? What's the setup for this trade? So I'm actually going to take you into a trade. I'm actually going to go back in time here a little bit. And I'm only going to go back in time for a brief period of time to kind of stress, okay, some of the trades and some of the trade opportunities. But this is IWM. And it's an IWM we term back spread. This is actually a volatility back spread. This trade was actually opened, okay, on March 23rd, closed on March 26th. And the timeout for just a second. Before I go into what the setup for the trade happened to be, let's explain a little bit about the trade. This is actually what we call, okay, a back spread, better known as a back ratio, okay, or a volatility back spread. There's a bunch of different names for it. Timeout for a second. Okay, this trade was on for a whopping 3 days. What you're looking at here is a screenshot. This is a screenshot of Thinkorswim. Okay, again, this is where I've executed the trades. The trades that I'm actually displaying to you here, okay, were done live. When I say live, in front of TheoTrade clientele, okay, every trade, they're all, real capital trades. I'm going to show you everything about my account here as we go through tonight. But I wanted to start with this particular trade. Now, if you don't understand, conceptually do not understand the back spread right now, that's okay, because I'm going to explain that as the evening goes on. But I want you to understand this particular trade, it does take risk, but the trade itself is actually put on, okay, for a 20-cent credit. So you're putting a trade on for a 20-cent credit. Then I turned around and took it off 3 days later for a $6.48 credit. So when you put something on for a credit, yes, it can still have risk, and there's actually some risk in here. Then I took it off for an additional credit. Obviously, this particular position worked and worked extremely well. After commissions and everything, it made about $6.60, okay, which is phenomenal returns for what? A 3-day period. But looking at this, okay, the trade itself, pretty straightforward. It's about the setup. What's the setup for it? Okay, the setup is actually pretty straightforward. The setup is simple, okay? We absolutely ripped the bottom of the expected move, okay? Now at this point, and I want to give you like a little bit of a background over here. This is where I put the trade on. This is where I took the trade off. It was that fast, okay? The big rip to the downside, okay? What I did when the marketplace was tanking, I put on, okay, a bullish strategies. So when I say I put on a bullish strategy, okay, this is a bullish strategy. And when I put on the bullish strategy, where do I want the market to go? I want the IWM to pop to the upside. Because if it pops to the upside, I can get a big credit. but I put the trade on for a 20-cent credit. You're like, wait, I don't get it. Okay, I'll tell you why I did this particular trade. The marketplace right here is an absolute, free fall. In here, I actually put on a bullish trade. Did I know we were going to go up? Absolutely, unequivocally, no. I didn't know we were going to go up. All I knew, is that we had, two of the largest breaches of expected move in the history of the marketplace. And it actually set up, following our criteria, it set up for a great shot to the upside. Didn't matter. I still put it on for a 20-cent credit. So if the marketplace continued to crash, I was still going to keep the 20 cents. So who cares? Marketplace continues on its merry way down. I get to keep the 20 cents. But if the market pops to the upside, that's actually what happened in this case. In this case, the market popped back to the upside. And I actually collected an additional $6.48. Now, this was done bullish. With me? Everybody okay? I did it again. And actually the exact same product. This is the IWM. This is another back spread. This one's actually put on April 24th, taken off April 29th. This one's put on for a 43-cent credit, exited for a $4.97 credit. By the way, I'm on Pacific time, if you're kind of curious. So it's Pacific time over here. So this one was put on at 9:12 in the morning, taken off a few days later at, 9:10 in the morning. If you notice, a lot of my trades are done at the exact same time of the day. They're done at that particular time of the day because that's when I was broadcasting live. I always do the trades when I'm broadcasting live. So what's the setup for this particular trade? Again, this is, a bullish trade. Did I know that the marketplace was going to rally up on April 24th? Of course not. I don't know anything. This is chaos. You want to see where April 24th happened to be? April 24th. It's right in the neighborhood here. Why right there? Because it tagged the bottom of the expected move. It tags the bottom of the expected move. There's a higher probability of a rip to the upside. All I basically did is say, but it didn't matter because I put the trade on. I put the trade on, for a 43-cent credit. So even if I was wrong and the marketplace crashed, I still get to keep the 43 cents. Got to learn this stuff. Listen, this is what our members are saying. This is on these particular days. Out of the IWM 202. This is another gentleman got 438 credit. Another gentleman, 213. Another gentleman, $1.93. This one exited it for 228. This is clientele that are literally doing the exact same trade, right? They put it on for a 43-cent credit. Some people took it off early for 213. Other people held it a little bit longer for 438. This is what it's about. Let's keep moving. This is the TLT. Who knows what the TLT is? TLT, you guys know what it is? Anybody? All right. So, by the way, I'm going to show the full Monty on this trade in a moment. You're going to see the actual the trades because people are asking about quantities, strikes, everything. I'm going to show you all that. So here's the TLT. What the TLT happens to be, bonds. Nobody ever dreamed. Like bonds don't move. The Fed controls the bonds. Really? Because this is actually back in June. How about this? I actually caught both sides of the move. The bonds, they don't move a whole lot. They didn't have to move a whole lot. The crazy thing about the bonds, the crazy thing about the bonds is check this out. The bonds, they have been breaching the expected move as well. Look at the breaches in the expected move here. This thing is Mr. Toad's wild ride, people. There's breaches all over the place. I'm telling you, the bond market isn't getting it right. The options market's doing a terrible job of handicapping risk. So there's a breach lower, led to the breach higher. This was a big breach lower. Then it actually led to a rip back to the upside. The market doing what? Correcting one way and correcting back the other way. Here's a trade. I did not know, and I want to show you, this trade was not a short trade. I put this one on April 29th. I didn't take it off till, June 3rd. This is the bonds. This is mellow. This one cost me 32 cents to put on, but I took it off for like $1 credit. That doesn't sound like a lot, so whatever, man. You made 60 some odd cents or 70 cents in here, Let's say after commissions and everything, you made 60 cents, and that's not that much. It's bonds, people. They don't move very much, Nobody ever dreamed. This is a bearish position in bonds, Who takes a bearish position in bonds when the Fed has full control of interest rates? I do, and I'll tell you why. Because the marketplace set us up for it. Okay, the marketplace all the way back here set us up. It was at the upper edge of the expected move. So I figured sooner or later it would break down. And it did. It did break down. But right after it broke down, I want you to see this trade. See this one? I exited, okay, the bearish trade on June 3rd. Then I turned around on June 5th and I'm like, I'm getting bullish now, okay? Because it ripped down so hard that it actually turned around and I got bullish. I put this one on for a 25-cent credit and closed it for 210. Okay, this, people, that is what we call a grand slam home run. It's the bonds. Okay, again, the bonds, they dipped down here. And again, right on 6.5. Okay, I didn't catch the bottom, by the way. I want to make that clear. I caught it in here. They went all the way down to here. They dipped and then they just exploded back. I'm not trying to time this marketplace. If you know what you're doing, you don't have to time the marketplace. You just put the thing on, okay? I was at the right place at the right time because I always have the strategies on. You got to recognize, okay, what we're doing here it isn't about market timing. It isn't about like know-how, like, oh man, his timing is really good. It's not about that. It's about this. The market's full of risk. The future is bright and full of risks. We're not suggesting that we can time wild moves. Nobody can. You can't time an outlier. Okay? You can't see the future. But we are, however, suggesting having placed the correct options-based strategies, it's going to make all the difference. Okay? These things are pricing wonderfully right now. You could be literally two trades. You are two trades away from this. And this is two separate trades. Okay? What you're looking at here, and this is the first time that we're going to mention this, okay? This is the infinity spread. And with the infinity spread, the intention is, okay, it has an upside shot, okay, with a downside shot. Trades are actually put on, okay? They are mutually exclusive. One trade is put on the IWM. The other trade is actually put on the VIX. Both of these trades I have on now, okay? These trades, this is today. This is, execution of these happened, okay? So these trades are on. It's all about, okay, how to handle the trade once it's on. And I want to make this clear. If you look at this trade, this is two contracts. This is two contracts. One of the trades, again, is an IWM. The other trade is in the VIX. And I want you to see the P&L graph. What is this? Okay, that's a very small loss. If the marketplace does absolutely nothing, we take a very small loss. If the marketplace pops to the upside, okay, two contracts, people, and you're looking at what? $2,000 P&L on a two lot? Can you imagine if you did 10 contracts of this? And if the marketplace tanks, okay, we have consistent returns to the downside. This is a trade that can be used if you have a stock portfolio, if you have a 401k, okay, which is heavily invested in the S&P 500, you have to do this. Because if the marketplace starts to crash, this trade will help offset the risk. This is only two contracts and capable, if we crash, $1,000, $2,000, okay, on a two lot. If you really needed, like if you had like what, $500,000 invested, you had $500,000 invested, I'm going to guess you're not going to do a two lot. You might be doing 20 contracts. And instead of making what, 1,500 at that point, you're making about 15,000 to help offset the risk of the marketplace coming down. Think about that for a second. You could actually also do this if you were short the marketplace. Okay, you can use this trade as a hedge or you could use it as a standalone. But the point that I want to make, this stuff's minimal risk. One trade's actually being put on for a 29-cent credit. The other trade is put on for what we term even money. You know what even money means? Not a debit or a credit. There is risk in these trades. I'm going to reiterate that. There is risk in these trades, but you don't have any upfront cost. Okay. In fact, you're doing this for a very, very mild credit. I'm going to show you more about this strategy here as we kind of cruise along throughout the course of the evening. The infinity spread. Okay. We always have these trades on. Always. And this is not a, I don't want you guys to think this is something new for the corona. It's been on for years. What I'm actually going to display to you right now, this is my trades. Proof is in the pudding, people. I'm actually going to display a number of key events surrounding the last few years, whereby markets and volatility did not effectively price risk. Thereafter, I'm actually going to display all of my current trades, and I'm going to show you the primary strategy I use for the opportunities. Before I get into this, before I start going really deep into this, because I'm going to show you a lot of different trades over here, and I'm going to show you exactly what I did. Every trade is going to be displayed here, the exact execution time, everything. Contracts, it's all in there. The point, before I go any further, the point that I want to make, I'm about to show you, okay, trade history, okay, from about 2015 on. Here's one of the crazy things. Over the last few years, okay, there is less than 10 events, okay, where the marketplace and volatility, okay, did not meet each other, meaning that the marketplace exceeded what volatility was implying. Currently, since the corona, okay, kicked in March, February, there have been 50 plus events, okay, where the marketplace, it's not handicapping risk. And that's, again, it's an area that people, they don't get it. And I'm going to show you because right now, as I said, the proof's in the pudding. Here, I've always been a crisis-seeking trader, okay? It's not all I do, but I always have trades on, okay, that profit from sheer chaos, from crisis. Here's actually one of the first ones to display to you. This is all the way back. Does anybody remember this, by the way? This was actually, it was August of 2015. Oh, quite ironically, it is almost, okay, to the day. It's 5 years ago, almost to the day. All right. So here it is. It actually kicked off. It was the yuan devaluation in August of 2015. The markets tanked, but that didn't, it was the volatility. The volatility was basically sitting at 15. A couple days later, the volatility was sitting at 40%. And that spike in volatility, all I'm going to do is show you right now. Here's a 24-hour period. So just to kind of take you into a little bit of a progression here, what you're looking at right there. This is actually my account statement, and it's the account number. This is the account statement for a 24-hour period of time. It's August 24th. Okay, to August 25th, 2015. If you follow me right down here, okay, the P&L at that point, okay, was $17,399 and change, okay, for a 24-hour period. That ain't bad for a 24-hour period in here. I know it's kind of small. It's small because I was doing a lot. I mean, I had a lot of different positions on at that point in time. And I'm just showing you again, it's the first bump up in volatility. Anytime there's a big bump in volatility, all right, I'm going to display it to you. So this is August of 2015. By the way, that was the first, okay, that was the first major crisis that hit when I was not working at a brokerage firm. When you work at a brokerage firm, you're not allowed to display your account statements, okay? Well, I didn't work at the brokerage firm at this point, so I'm displaying my account statements. Next, this is the taper tantrum of 2016. Now, this lasted a long time. This was a fairly precipitous slide where volatility came up and came up big. Volatility was sitting, again, about 15% and came up north of about 30%. So what did I do? That was actually a much longer period of time. It lasted 2 months. So here's what I'm going to show you. Okay, I'm actually displaying to you the taper tantrum of 2016. The dates, this is the account number. The dates are actually January 1st, 2016 to February 29th, 2016. It's leap year, February 29th, 2016. So that's exactly 2 months. Inside of 2 months, okay, the P&L is right there. Okay, it's $103,780. So it's just over $100,000. You want to see what's possible, what's plausible. This is just a small bump up in volatility. Okay, that's the taper tantrum of 2016. Okay, we hit it hard, made about $100,000 on there. By the way, people always ask me, like, what was the size of the account? Okay, well, there's an answer for that. You want to see the exact size of the account? Okay, look at the margin requirement. The margin requirement is about 200,000. Okay, so with about 200,000 in margin, I didn't use the full account, but I want to show you how much capital I had tied up. With about $200,000 tied up, I made over $100,000 on it. Okay, which is a phenomenal return if you look at margin utilization versus P&L. And that was P&L year to date. So it started right at the beginning of the year. So that was the taper tantrum, 2016. 2016, though, look at this. Brexit happened in 2016. Huge spike in volatility. Brexit, okay? Brexit was kind of a little bit of a flash in the pan, but I'll tell you exactly how I did in Brexit. This is a 24-hour period, okay? This is 623 to 624. Follow me down here. It's $25,000, okay? $201. That was my P&L over a 24-hour period on the Brexit vote. I'm just continuing right on. Here's also 2016. Some of you guys will actually remember presidential election. It happened, people. When the presidential election happened, volatility took off to the upside. Are we starting to see a trend over here? Volatility taking off to the upside, but then volatility actually crashed. Here it is. This is actually the first time, okay? This is the first time now. Now I'm actually showing you definitively the positions that made the money, okay? These are types of volatility back spreads. You can see the exact date and time each of the trades was put on and taken off. This is a trade, okay, that is less than 24 hours. They are also options on futures. They were open at night. I put them on for a $2.65 credit. I took this trade off for a $19.25 credit. Okay, down below, again, this is part of the infinity spread. Put this trade on November 8th, took it off November 10th, 70-cent credit. I had over $30.75 credit on closing this. Okay, they're just types, again, of the infinity spread that I displayed to you. So all we've shown thus far, China, okay, 2015, then we had early 2016, right? The taper tantrum, okay? Then we basically had what? Brexit. Then we actually had the presidential election. We're only up to 4, right? Only up to 4. You know what happened in 2017? Nothing. Jumped to 2018. I just want to make a point over here because volatility right now, you got to think about right now compared to then. I'm sitting here for like a year. I was making money in 2017, but not like this. This is a volatility event in January and February of 2018. So I jumped to 2018 because I wanted you to see this is one of the biggest spikes on record in the VIX. The VIX was actually at 12, and then like basically 3 days later was over 40. Okay, that was good eats, people. Good eats. So now I'm actually getting to specific trades. This, okay, is the infinity spread. This is the infinity spread. And the infinity spread, I paid $1.37 for it. I closed it for $10.58. This infinity spread was actually put on January 17th, taken off, okay, February 9th. What I want you to understand about this trade, I had no idea risk was coming. None. I can't see the future. You go, so why'd you have it on, Don? Because I always have it on, because it costs $1.37. And people don't understand the logic here. Okay? If I put this trade on, it cost me $1.37. Then I put another one on, cost me $1.37. Then I put another one on, cost me $1.37. And you only have to put it on, okay, about 4 times a year. Here we are, 1, 2, 3. Let's say on the 4th time, you make $10.58. Is this strategy, is it worth it? You decide if it's worth it. Okay? Think about how many of these you can do at $1.37 and strike out. You only have to hit pay dirt once or twice a year. Okay? You don't even have to hit it once a year. You could hit pay dirt once every 2 years. It is huge. You can do phenomenal numbers of contracts on this. So this is actually January, February of 2018. It gets better. This is Fed-fueled selling in late 2018. Okay? This is Christmas. Christmas time. This is when we tanked, okay? Because the Fed, well, blame this one on Jerome Powell, but volatility was 11%. I'm going to make something clear. Not only couldn't I time this, I closed the trade way too early. But you want to see how I did? Ironically, guess what? I had the same strategy on. I told you, I always have the strategy on. Always. Here it is. Okay? I put it on in September. Why in September? Because I told you I put it on 4 times a year. Okay? September, December, right? March, June. Those are the quarterly expirations. Put it on put it on in September, close it in October. I only paid $1.20, closed it for $6.59. It's gold, Jerry, gold. That was hitting it out of the park. Okay? All I just showed you is what? 6, 7 different volatility events. over a 3-year period of time. The biggest volatility event I personally have ever had, okay, was the financial crisis. Now, the financial crisis in 2008, it's not a popular thing to discuss, okay? It's just not. Like, people, nobody saw that one coming. Of course they did. I worked in the financial industry. Everybody in the financial industry saw it coming. I love how they have movies years later. Nobody saw it coming except a couple of rogue traders working in their garage, which is a bunch of garbage. I worked at Thinkorswim at the time. By the way, I cannot display the account statement from the time that I was at the brokerage firm, but I will display to you the proceeds of what I did with the money. The thing about the financial crisis is you had to have positions on it. If you didn't have positions on, it wasn't going to work. And it was the exact same positions that I'm showing you here. I turned around after the financial crisis. Okay, I waited a little while, but I actually purchased at the time predominantly in cash this. Okay, so it's where to this day I still live in Scottsdale, Arizona. But this was my financial crisis trade. This was the proceeds of the financial crisis trade. I don't mind anybody seeing this because one of the best trades I've ever had. I turned around from the financial crisis and I went in Scottsdale. And by the way, I bought the house in July of 2010, but I bought it for $1.3 million. Talk about a trade, because it's easily worth. Our house is probably closer to $3.5 million right now. It's and it's people can always ask questions about a house. What does a 8,000 square foot house, or what does a $3 million house look like inside? Well, I'll tell you what, I didn't pay $3 million for it. I paid $1.3 million. But at the time that I actually bought the house, again, it was in 2010. People, I was only 34 years old at the time that I bought the house. I'm only in my mid-40s right now. By the way, this is what a $3 million house looks like up in the hills. So I'm actually in kind of eastern Scottsdale area. So for those of you that kind of recognize, it's a mountain. But it is the infamous indoor basketball court, which we made some improvements in here, which I'm going to show you momentarily. But and yes, every house apparently has a movie theater in it as well. By the way, I'm not even in this house right now. I'm up in Payson, Arizona. We bought another house up here about 18 months ago in Payson, and a smaller home, but I actually like it up here. I like it. There's no basketball court, I'm sorry, inside of this house over here. But you have to start to gather. And what I'm about to show you, this is a handful of events that just had phenomenal gains. But in infinity spreads, the opportunities, they are way better right now. We've never seen trading like this, okay? You have got to learn how to do this particular strategy, okay? And I want to show you what's capable right now, because people want to know, like, what kind of returns are you getting and so forth. I'm actually going to show you exactly returns, okay? What I'm showing you here is an account statement. This is actually my IRA. This is an IRA. This is not a portfolio margin account. It's an IRA. Right here in February, okay, February 23rd, I started with $211,000. This is, again, this is what we call a 5-day net lick. For those of you, again, this one's from the Thinkorswim platform. So in a 5-day net liquidating value, okay, I know it kind of looks backwards, but this is the way it works because it counts down, B-1, B-2, B-3. But incrementally, this is what a good week looks like. This is the beginning of the onset of the Corona crash. Again, it's not popular to talk about, making money during a crash. This is precisely 1 month later. The account jumped to 305. By the end of that week, it was at 308. Then I actually skipped to the end of, basically, I just gave you the end of July. Obviously, we're not the end of August yet. By the end of July, we're actually up to almost $400,000 in the account. So it's $392,000 in change inside of my my IRA at this point. And as I said, this is good trading. And I know people are looking at this and like, I wanted to see multiple $1 million. It's an IRA, people, and I'm conservative. Okay, I'm not taking ridiculous shots over here. And now I'm actually going to show you, okay, the history of some of these trades. So just to show you history in these trades, this is before Corona. 12-cent debit. Close this one for a $350 credit. Okay. And again, everybody gets to see these trades live. Listen, what our clientele are saying. Okay. This is the second time I've been to down service. It took a while to sink in, but in-out spreads are saving my beep Now I'm doing them everywhere. They fit also using the risk twist trade. By the way, the risk twist, the infinity spread is the risk twist. Okay, so we actually have, the risk twist is the put side of the infinity spread. It's embarrassing to think the tens of thousands I spent on option info and classes. Don's classes are the greatest, from Gary M. This one's from Vicky. I closed the TLT risk twist spread, okay, for 127% gain. Price was moving around so fast I had to use a market order. Pretty excited to see with the whole RTS, that's risk twist trade cycle, and how well it worked. Moving on over here. Okay, this is actually a SPY infinity back spread. This one is also, it's 2019. Okay, I just wanted to show you, this is, kind of average trades. 2019, people, what I'm getting to here, 2019 and the beginning of the year, this was not a really volatile time, but the trade kind of worked a little bit, kind of did. Now we start to get to more interesting times. And now I'm going to actually bring you, I wanted to give you a little history, right? So a little 2000 showed you all the way from 2015, 2016. I said nothing happened in 2017. Now we're actually what? I showed you 2018. There was a couple of good trades in there. Showed you a little bit about 2019. It was lackluster. Here we go. Now we're actually in 2020. We're home, baby. Listen, this is actually a VIX vol spread. The VIX vol spread, one of the most powerful volatility spreads. It was put on for zero. No credit, no debit. It's called even money trade. I closed it for $375. That is, again, it's a grand slam home run. Did I know that the Corona crash was going to happen? Of course not. I don't know anything. Okay. This is the end of February. This is where the marketplace, it started to slide because of Corona. Okay. And I thought it was going to be a flash in the pan like everything else. I didn't know. Because if I had known, this trade was good till March. I would have held it. Do you know what this thing would have been with $375? This thing would have been worth like $30 or $40, but I didn't know. And I want to make a point here. I did not know anything in January when I put it on. I don't think I even heard of Corona probably until that time. Okay, probably right around this time I heard about the Corona thing, but I didn't think anything of it. Okay, I mean, I just didn't think of anything of it. And I wanted to make that point that I didn't know anything getting into this spread. Okay. Oh, here's another one from 2019. I wanted to display this one because everybody thinks like Tesla's the greatest trade. Tesla can be good. Okay, Tesla can be good, but it's a little bit more spotty, right? This is a Tesla trade from 2019 that I did. I put it on for a 20-cent debit. I closed it for an $11 credit. The reason I put this in here, it just had to laugh because Tesla was in the $300 range. And again, you're like, oh, your timing was this. There's no timing. If I had known this thing is trading at $1,600 today, okay? You don't know anything. You're a sitting duck. By the way, after I made money on this spread, this is actually a pretty good spread because I did this one quite a number of times. After I made money on the spread, I went out and actually bought one. By the way, if you have never driven one of these or you have the ability to buy one, I strongly urge you to do so. Yours does not come with that. That belongs to me. I have 3 of those. That's the youngest. It's also the most dangerous. Yeah, I say put your trading account in ludicrous mode. It is a quite the ride, and it's insanely fast. All right, continuing on past the Tesla spread. This is actually a SPY risk twist spread. As I said, I always put the strategy on. I also closed this one February 27th. Know anything about February 27th? I didn't know anything about it. This is every $180 I invested. Every $180 I invested, I got back $1,053. It's a 485% return. Now, let's put this in context for just a second. Okay? You didn't have to invest $180, nor did I. If you invested $1,800, do you realize that's $10,530? Okay, all I'm showing you here, by showing you it's a $1.80 debit, that's like if you did one contract. You don't have to do one contract. Do 10 contracts. $1,800. What happened? $1,800 could go to nothing. Okay, or it could be worth $10,000 or possibly more. Let me actually show you another one because now I'm actually showing you the trades from the actual Corona crash. The next one up to bat. Check this out. This is the financials. This is the XLF. The financials were a $30 product. I paid 36 cents for the trade. And I closed it for $1.35. Now that doesn't seem like a lot. It's a 275% return. Again, I closed it on February 27th because I was thinking to myself, I'm like, nah, this marketplace is not going to get any more crazy. I got to get out of this stuff. I mean, these are huge returns. I'm not going to give up these humongous returns. Like, I got to get out of here. Then I started to think to myself, look, here's another one I closed on what? February 28th. Okay. This is the XHB. This is the home builders. 53-cent debit, closed it for $3.62. It's every $53 I invested, I got back $362. Literally. And I want to make something clear. People say, can I do this with E-Trade? Of course. Can I do this with TD Ameritrade? Of course. This is at TD Ameritrade. It's on Thinkorswim. Can I do this, at Tastyworks? Yes, you could do this at all the major brokerage firms, right? How much do I have to have in my account? You have to have $2,000 minimum to do this trade in your account. That's not my rule. Okay, that's not even the brokerage firm rule. You have to have $2,000 minimum. That's Securities Exchange Commission FINRA reg. It's a FINRA reg. If you're going to trade options and do what they call a complex strategy, there's nothing complex about this. Okay, but you have to have $2,000 in the account. Literally, it's $53. You realize if you did $530, which is a 10 lot, it's $3,620. Okay, I think almost everybody in here could risk $530. That's a return, people. Okay. Now, here's where it gets crazy. I just showed you all these past years of 2015 and 2016 and 2018 and 2019. I'm showing you right now 2 months. Okay? 2 months. Here is an XLU. This is the utility sector. You know how boring the utility sector? Nobody's ever made anything in utilities. That's why they're utilities. Okay? Every $96 I invested, I got back literally $1,272. It's a 1,225% return. Okay. It's huge. Okay. It's an absolute, monstrosity of a trade. I could have done this $960. Okay. Makes what? $12,700. Okay. And $20. The reason I'm displaying this, you just saw my returns in my IRA. And you looked at my IRA and you thought, there's no way. He doubled his IRA in the middle of like a crash and like a rally. Double my IRA in the crash and the rally because I actually use volatility and back spreads, infinity spreads. Not done yet. This is the EEM. Okay. So I already showed you a bunch of IWM trades. This is the emerging markets. This is actually on what? May 8th? Closed on what? June 5th. I want to get more recent. Every 18 cent credit, took it off for $1.07 credit. Okay. This is another XLF. This is actually back in the May time frame. This trade was about 3 weeks. Put it on for nothing, took it off for a 51-cent credit. Look, the volatility is starting to die down, right? You can't make as much. I've never hit this many good trades. No one has in this because people are missing what you should be doing. Here's another one in the XLF. This one's actually, and I wanted to get more recent. So this one's open June 1st, closed June 3rd. Every 25-cent credit, I took it off for a 26-cent credit. That doesn't sound like a lot. You're like, oh, whatever, man. It's 50 cents. It's 50 cents. On a $20 product. On a percentage basis, these are huge. Again, what our members are saying, 570% gain, onward. XLF back ratio was a nice winner. Wilhelm, Don, new here. XLF and Baidu ratios, batting 1,000. Ed, close my XLF. Thanks, Don. Got an XLF. This guy got a 204 credit on this thing. Here's an XLE back spread. That XLE, what is that? It's the energy sector. Put on June 2nd, closed June 5th. 5-cent debit closed for $1.35 credit. Okay. Every product that you're looking at here, the TLT, you've seen the TLT a bunch of times in here. June 5th, closed June 11th, right? This one put on for a 25-cent credit, closed for a $2 credit. By the way, that's a ridiculous size credit inside of none other than the TLT. Okay. Here's another one, a Roku. Now I want to show you something interesting in Roku because the Roku, we're getting a much more recent, right? And you're like, oh, Roku's pretty wild. I put it on for a $2.05 credit. I closed it for a 38-cent debit, which means what did I really make on it? Let's say after everything I made about $1.60. So I made $1.60. Do you understand? This is a bearish trade. This is a loser that I made $1.60 on. That's why I'm actually displaying it. It's a loser. You're like, huh, that's interesting. How's it a loser? Look, I put it on what? June 19th. Take a look at the chart. Let me actually show you the chart on June 19th because I want to definitively show you. Here, right in here is June 19th. The market did nothing but go up. It dipped for a minute, but it went up and up and up and up, and I closed it somewhere in this neighborhood over here. The trade, people, was a loss. but put on correctly. Look, it was bearish. It was with puts. Again, taken off, July 10th? I still made $1.60 on a losing trade. That's why I wanted to show you, okay? The market did nothing but move against me, and I still actually pulled out decent profitability. Here's a Microsoft back spread, okay? Microsoft, and now I'm trying to get more and more recent. This is actually June. 76-cent credit, taken off for a $5.40 credit. Why? Because Microsoft smashed to the upside, okay? And I was there for it. Did I know Microsoft was going to blow to the upside? Of course not, okay? But it had done it. It had displayed, okay, the non-efficiency in the marketplace. Look, what our members are saying. John Nolan, I sold Microsoft back ratio for $5.50. Okay, look at my price. This guy did better than I did. I got $5.40. He got $5.50. Omar, $5.87. Jurg actually got out of it, wiggled out of it. Worked like a charm, okay? This is actually silver. Now we're getting really recent, okay? In the silver back spread. Here, I put it on for a 23-cent credit. Now, if you've not looked at silver recently, silver and gold are on a tear. What is silver and gold doing? Straight up. Look, I put on bearish trades. Silver's been straight up. I still made a 20-cent credit. I took the trade off. This trade is a losing trade, but I made money on it. And most people cannot say that, right? I mean, how many trades do you legitimately put on? You're like, oh yeah, trade's a total loser. Silver actually went, 26, 27 region and actually pulled back a little bit, but I pulled the strategy off. I still made 20 cents on it. The next one, okay? This is about as recent as I can make it, okay? How can I make it more recent than this? This one was actually put on, July 30th? It was taken off today, literally today. 52-cent credit taken off for a $2.33 credit. Remember, if you did one contract, it's $52. Did 10 contracts, put on for a $520 credit, taken off for $2,330. That ain't bad, okay? For 2-week period of time? All I knew is the QQQ, it's been volatile. It's been volatile to the upside. But again, you could take shots on either side of the marketplace. But you got to realize, why did I do the trade? This is a bullish trade. But if I was wrong and the QQQ tanked, I still would have kept the 52 cents. Okay? Still would have kept the 52 cents over here. By the way, you want to see what I did some of the proceeds. Some of the proceeds of the Corona trade. This was my trade. My wife said I'm not allowed to go to the gym anymore. So my kids are totally distraught. I built a gym in the basketball court. They're not going to be happy about that. They're about to paint the thing. So they were actually taping off the floor when I took the photo in there. There was a gym a couple of miles away from me. And I posted an ad, and the gym owner called me, said, I'm closing down. I'll sell you all the equipment. And I said, done, sold. Took all the equipment from the entire gym, moved it in there. Even got a Stairmaster in here, multiple treadmills. Okay, it's a party, people. I'm not allowed to get out too often. So they locked me up. They let me work out in here. Again, what our members are saying. Jamie G, thanks, Don. I'm out for 752. Diamond, you're amazing. Lee Ali. Made $1,458 today with techniques that I learned at TheoTrade. Pablo, thanks, Don. Nice profits. Have a great weekend. Here's actually another one that I want to throw up here. Daniel Fabian. Hey, guys, new member. By the way, this is recent, okay? New member. Been lurking here from chat for about a month. Was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. This is actually August 8th. Brent W., you won't find a more supportive and more profitable room anywhere in the retail trade business. Ali, Don helped me pay for 1 year of a TheoTrade subscription with the QQQ. This is actually the back spread that I did in there. And if you don't have a lot of time, listen, the trades that I'm displaying to you today do not have to be intensive trades, right? And I'm going to answer all the questions here in a minute because I see a bunch of them. But the trades I'm doing, this stuff is not intense. It's not sitting here all day long watching markets. You can even use good till canceled orders. The trade results, it's perfect for part-timers, right? I'm using in a lot of these strategies, and right now I'm really using these extensively, what we call set and forget, which is called GTC. The reason I'm using that, the markets are moving fast lately, so it'll tag your profitability point and pull back. So I'm even using these, and I sit there throughout the course of the day. I'm telling you, even a fraction of your time for this strategy, it's enough to see results. But right now, a lot of people have the time to look at their screens. That's why the trade numbers are so high right now. Like you look at TD Ameritrade, they're doing almost 4 million trades a day. Okay, it's like utopia out there. What you got to understand is the characteristics of these infinity spreads. Okay, listen, the characteristics of the infinity spreads: it increases in value when exposed to heavy volatility, increases in value when markets sell off or rally huge. Significant profit potential to the downside. There's also a significant profit potential to the upside. It will lose minimal capital if the markets just completely drift. Okay, as I said earlier, you go out there, you do that $1.37. You go out there, you do that $1.37. You go out there and you pay that $1.37, and all of a sudden on the fourth time of the trade, you make $10.53. That is part of the logic of the strategy. You intend to take a hit. Unbelievable returns. The only difference is right now, we're putting trades on and they're making money. We're putting trades on and they're making money. Nobody has seen the volatility sustain like this. Okay, need only be placed a few times a year, but right now I'm placing these much more often. Obviously, it's the perfect spread to reduce risk though of a stock portfolio. Because you know what? If the marketplace does come tanking back down, you need to have on this VIX volatility spread. Okay, it's also an excellent tool for those seeking returns off of a huge market event. You want to get some big returns off of a market event. This is your strategy. But you got to understand though, you got to build this thing. You got to build the infinity spread. And this is where a lot of people, if you're brand new and you're like, this is the first time you've ever been exposed to options. And how many people this is the first time they've ever been exposed to options? Because they look at this and they're like, I'm intimidated. Don't be intimidated. Okay. The spread below is being done for a 29-cent credit. And I say, don't be intimidated. Okay. If I can display, okay, in like the last hour, conceptually, you understand what we're doing. We're looking for marketplaces, okay, that are just exceeding what they're supposed to do. If you understand that conceptually, give us a few hours and we can teach you everything you need to know about an infinity spread. As I said, the spread below is being done for a 29-cent credit. But I'm also going to say this. Options are the power tools of the marketplace. Okay? When I say the power tools, like you're going to go out there, you're going to cut down a tree, use a chainsaw. But if you do not know how to use a chainsaw, okay, you're going to lop off a couple of fingers, maybe an arm. Options are the exact same thing. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the markets. But if you do not know how to use options correctly, okay, you can cut off a couple of fingers. You got to know how to manage these strategies. You have to know, when do I get into them? When do we get out of them? Okay, people, okay, that's what we're about to talk about. Listen, this is what you need to know to successfully create infinite possible returns with minimal risk. You got to learn these infinity spreads. When I say, this is what you need to know. Listen, when and where do I place my infinity spread trades? Okay. When I say when and where, what product? What should you do this in? Come on, you saw a couple things. What did I do? You saw one there in XLU, right? What else did you see? XLE, you saw spiders, you saw a couple in the IWM, you even saw some Roku. Everybody goes Tesla. I'll tell you right now, you do this in Tesla, you're definitely dead. Okay, you didn't see anything in Apple, you saw some Microsoft, you saw a whole bunch of TLT trades in here. It goes on and on and on. But you need to know when to do it, timing wise. But where? What product, right? How often should I place these infinity positions? Do they have to be continually monitored? I'll tell you that right now. You don't have to monitor these. It's pretty much set them and forget them. It's kind of what we call a set and forget strategy. There are times you put this thing on and you're like, oh, I totally forgot about that one. Boom. And you get hit on it. Okay. How do I set the trades up? What's the correct market volatility? One of the key components, one of the absolute key components to the infinity spread, volatility. Too much of it, you're already dead. Too little, you're not going to make any money on it anyway. There has to be the sweet spot. Sometimes the TLT will work, but then you can't do it other times. Tesla, I'm sorry, it's too volatile right now. Then you go, what about mRNA? What about this? Listen, if everybody knows a stock is volatile, then it doesn't work. You have to have the right volatility in the spiders. You have to have the right volatility. But you know what? You can scan for that in seconds. Okay? But you got to know the right market volatility to place the trades within. Okay? Do I need a large amount of capital in my account to do this? Absolutely not. You saw a trade on the XLF. What did I do it for? 23-cent credit. You saw trades, okay, on the XLU that I did for what? 56-cent credits, right? Nominal. You saw a trade on the VIX that I put on for even money. Even money, which I don't even have that much up front. What do you have to have in the account? You do have to have $2,000 in the account. You can do everything I just showed you in an IRA. I showed you the trades that I showed you, and every trade that I showed you tonight was done inside my IRA. Every single trade was done in my IRA. Okay? What underlying stocks or indices make the best candidates? So whittling it down again, and here I am talking about candidates, because candidacy is the most important thing. The wrong candidate, you're already dead. It doesn't even matter. You got to have liquidity. You got to have the right volatility. You got to have weekly options. It just goes on and on and on and on. Okay? You have to have, right, X number of factors fit into place. How do I know when to get in? More appropriately, when to get out? What are the percentage returns supposed to be? Can I do this in an IRA or retirement account? Yes, I just answered this. How do I size the trades from my account? Okay? If I have sized the trades, let's say you're using this against your 401k. Okay? And your 401k is equivalent to $203,000. Okay? How many infinity spreads do I place? There's an entire module of exactly how many trades to do versus what your portfolio is worth. Okay? Just for hedging. And if you have a $2,000 account, we'll tell you exactly how many contracts and what the risk should be. Literally. Okay? What is the right amount of risk for you? How do we define that? Depends on volatility, depends on account size. How do I actually go about building the infinity spread? Right? There was one trade, okay? You saw one trade that was being done in the IWM. The other trade is being done in the VIX. Do I place them at the same time? They're mutually exclusive trades. Do I do this one, then this one? How do I put them together? Do I look at the P&L graph? Like, again, how do I actually contextually go out and build this thing? Let me show you what we do here at TheoTrade. We create recipes in trading. A lot of people don't really get what that is. What a recipe happens to be, it's just like baking a cake. Okay, it's literally like baking a cake. It's like going through a checklist. You know, step 1, step 2, step 3, step 4, step 5. Step 1, okay, we start with liquidity. Step 2, product selection. Step 3, what's the volatility? Step 4, expiration selection. Step 5, select the right strikes. Step 6, create the trade. So that's actually the build of the trade. Step 7, size the trade. Step 8, execution of the trade. It just goes and goes and goes and goes. You want to know what recipes happen to be? This is recipes in trading. Okay, listen, trading, it's all about answering the what ifs. What might be a good infinity spread candidate? What's the correct options expiration? How much capital do I commit? When should I execute the trade? What strike price options do I buy? Which one do I sell? Listen, that's what we do here. TheoTrade has the answers. We build these recipes, and these recipes, they have definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. When I talk about checklists, I think that the best way to preface, the discussion of checklists, it's a pre-flight checklist. You get into a 747 or a 737. Nobody wants to fly a 737 MAX, but if you get into an aircraft, the pilot literally goes through checklist, 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 checklist. I mean, the walk around the aircraft, they're like pulling on the wings out there. That's what we create here. More appropriately, and one thing I want you guys to understand, when I talk about, checklists, we don't just get you in. Once you're into the thing, you have to deal with variables. What if the market goes up? What if the market goes down? What if the market stays flat? What if expiration is coming? What if there's a dividend payable? What if the marketplace crashes? Okay, think about this. All right? TheoTrade is the answer to your question. We'll give you the right probability for the trade. How many option contracts do I do for my account size? When do I close the infinity spread? What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's how, it's when, it's why, it's at what price. It's just the beginning. It's mind-numbing how many different variables you're going to encounter when trading infinity spreads, right? And those variables, they have to be covered. You have to have your angles covered. And we actually build literally flow charts. Where do I go from here? Where do I go from here? What if the market goes up? What if it goes against me? Listen, you can read what a spread is. You can read about volatility back ratios till you're blue in the face. You can Google it right now. People do this all the time. They go, screw it. I'm just going to Google it. I'm going to Google what a back ratio is. That's great. Everybody in here can learn how to build ratio spreads. 10,000 different sites are going to show you what a ratio spread is. Not one of them is going to give you TheoTrade's recipe for success on infinity spreads. This is a little bit about me. I had 20 plus years of trading experience. But you want to know where this criteria comes from? I had access to client order flow for 15 years. We knew exactly every single angle to cover. Okay? If the stock goes up, if the stock goes down, if dividends are coming, if expiration is going to be here, what the margin is going to be, what the reduction in buying power is, if you name a variable, okay, we have an answer for it, the criteria. We viewed and studied millions of trading accounts. I ran education for 15 years at a firm with the largest option order flow in the industry, okay? And we studied everything there is to know about retail clients. We know the pitfalls that you fall into, but more appropriately, our own trading, okay? Our own trading has developed this criteria, okay, alongside of what we learned from watching and studying retail clientele. And I say we, okay, what do you think we have here at TheoTrade? Okay, where do you think a lot of the TheoTrade instructors came from, right? Trading floors, the brokerage business, it's experience. Listen, criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. And we spent years, literally years, fine-tuning this trade setup and the criteria. When you approach the section on criteria, you follow the steps to build a trade. We built, okay, 2 separate courses for infinity spreads. It's the only course curriculum where we had to actually comprise 2 different classes because there is an upside capacity to this and there's a downside. And it was much more effective to actually teach them independently rather than put together, this 5-hour course. So we have a volatility crash course. Okay. It's a 2.5-hour course available immediately. I am the instructor for that. Okay. It's available immediately. It's in the can. It's ready to go. Then we have the volatility backspread course. It's a 3-hour course. It's available immediately as well. And I give you all the curriculum for it. The slide deck that includes entry and exit criteria, the checklists, are available immediately for download. And this course is archived 24/7. TheoTrade is not just web-based. TheoTrade also has a mobile application for both iOS, which is Apple, and Android, which of course is Google. So we build mobile applications for both so that you can download these courses, watch them even if you're offline. Both courses tonight, are $497. I'm going to give you momentarily the curriculum for these particular classes. And that is, what are we going to go through in the classes? Before I do that, I want to make quick mention of this, okay? Here at TheoTrade, we strive to kind of differentiate ourselves. And I want you guys to recognize this right up front. Before I show you anything else, okay? The upcoming class here, it's $497. And again, I shouldn't say upcoming. These classes are ready to go. You can watch them. You can literally start watching them tonight. You'll be totally blown away by what we've done in the classes. By the way, both classes are very recent. We have them recorded because we edited them. Okay, we refined them. They're phenomenal. You're going to love these classes. But what I want to explain to you right now before I go any further is this. We recognize that many of you here attending this evening, we have a lot of people on tonight as well, so I appreciate everybody coming out tonight. Many of you here, you have been to other courses before. You've actually seen all kinds of educational packages and so forth. How many people here have actually attended a class elsewhere in the past? Anywhere. Okay, not TheoTrade. How many people here have actually attended a class anywhere else in the past? Because the point I want to make, I want to differentiate ourselves right now. Here at TheoTrade, we do things differently. We do not go out and sell you a class and then just put you on your merry way, okay? Because everybody has to recognize there's one thing and one thing important to us, and that is you not only understanding the trades that we're building, okay, but that's us supporting you during, your learning curve. At TheoTrade, we don't go out and just sell a class for $497 because everybody knows how this works. You sell a class for $497, then they sell you another class for $497. Then somebody sells you an indicator. You have to buy an indicator with the class for $497. By the way, then you have to take a class on the indicator for $497. It's ridiculous. And I'm going to tell you right now, okay, we're going to put some phenomenal bonuses with this class for $497. And at TheoTrade, and I'll just preface the discussion with this at TheoTrade, we do not sell classes a la carte. We do not sell indicators a la carte. If you want to learn this business, not just about these trades and not just about infinity spreads, if you want to learn this business, okay, if you want to learn, okay, and hold our hand and we'll trade with you. If you want to be able to email us, okay, talk to us on a day-to-day basis, this might be the place for you. Now I'm going to show you the course curriculum. Then I'm going to take you through how we actually go about supporting clientele. Currently at TheoTrade, we have over 6,000 subscribers. Okay. We do not sell memberships. We don't do anything of the kind. And again, I want you guys to understand we have over 6,000 clientele because no one anywhere in this business can touch what we're capable of doing. With that, let me actually show you the curriculum. Then I'll take you through some of the bonuses tonight. Infinity Spreads Workshop Curriculum. Okay. So we're actually going to take you through kind of a composite here. First and foremost, how to construct infinity spreads for maximum returns, minimal risk. Okay. How to build your own infinity spreads in stock, index, and ETF with, again, detailed step-by-step entry and exit criteria. How to build infinity spreads, whether you're bullish, whether you're bearish, whether you're neutral. How to hedge, that's risk reduction on your portfolio from pending market turmoil with these volatility sensitive strategies. I think that's critical. There's going to be somebody in here tonight. I know people look at this and like, it's $497. There's somebody in here tonight, I guarantee you, okay, with a $500,000 portfolio. Okay. Literally, they'll have a $500,000 portfolio and they won't even learn how to hedge it. And I just don't get it. Okay. If I know a lot of people want to learn to make money, but those of you that have portfolios, don't you think it's a good time to hedge? Okay. You have pending market turmoil coming to a theater near you. You all know it's coming. Okay. Everybody know that it's coming. But we shall continue on. Okay. When to open and when is the best time to close your infinity spreads. So we'll get to opening and closing, the tools and strategies for analyzing, okay, any market conditions so you can trade with confidence in every single trade. Okay. How to create trades based on movement and market volatility, not purely direction. So we're talking about here, okay, movement in market volatility, not on direction of the marketplace, because the strategy can actually profit on both sides of the marketplace. Okay. How to generate big returns with a small account or a retirement account with minimal risk, minimal options experience, what strikes, what expiration. Okay. We'll give you everything to give you the highest probability of success, okay, and why infinity spreads are perfect for part-time traders. It doesn't mean you have to be glued to the screen all day. And I always make that point because, well, it's critical. I also want to show you this before I go into some of the bonuses, okay? This actually came in, I know it says today, this actually came in last week, okay, to be fair, but I took the screenshot last week. This is my response, but here's actually an email from a gentleman by the name of Ken. If it's okay, I blacked out his last name. He says, woohoo, thank you, Don. I'm never sure of trades, okay, that are new to me that I structure myself, okay? This is great to hear. Not to brag, but this is due to you and your magnificent team. I am up this year $1.67 million in profit. Yes, I'm going to pull a big chunk, okay, or hunk out of this of my wife's accounts. Plus, I'm going to give my granddaughter $50,000 to work on her master's degree thanks to all of you. I'll let you know how this trade goes, okay? I need to check the chart on it's actually Japanese ETF. We were talking about a Japanese ETF back and forth. Thank you again, okay? The Blank family. So I want to thank Ken, and I wrote back to Ken, and I said, I love hearing it. Let me know if you need anything. I just want you guys to understand that we email back and forth constantly with the clients. I've known Ken. Ken's actually been with TheoTrade for about 3 years now. But anyway, that is, okay, a monstrosity in profitability. And also to know this, Ken has a fairly large account. It's okay. Gentleman's actually up 1.67 million, large account or not. When I say large account, okay, he's, multiple millions. He's not, ridiculous. He's not in the 8-figure kind of club, but he's got a larger account over here. In addition to what we just displayed about these infinity spreads, so we'll take you through the curriculum. We also do a weekly video, okay, Every single Friday, which is tomorrow, we will update you on infinity spreads that we currently have on. We also text trades out to you. So this is detailed explanations in a week-to-week video of every single move that we make. But in addition, we'll text the trade out when we do the trade. We'll get to that in a moment. Listen, you want a bonus. As I was saying a moment ago, we go beyond a class or an indicator. Like, we actually understand this business. Give you a little background on me. So I started in the market making business in 1998. I joined Thinkorswim in 2001. And the reason I give you a little background, so when I was at Thinkorswim, I traded for my own account, and I also ran the education division. And when I built and ran the education division, I looked at every other educator out there. Literally, when I say I looked at everything from 2001 to 2015, if you name any education firm, I know them. Okay, I know everything about them. I'm actually the guy that actually cut deals with some of the education firms to say, send your clients to Thinkorswim. I know everything about them. And the one thing that always drove me crazy about every single education firm out there, all they do is what? Fork over more money to them and fork over more money to them. And I got to tell you, okay, as an educator working for Thinkorswim, it pissed me off. And it still pisses me off. People charge $30,000 for a crap education. We understand one thing here at TheoTrade, okay? And we actually built this from literally, we started in 2016. We built to over 6,000 members on this premise, okay? We're going to give you everything that you need to trade, everything you need to invest, every indicator at one place and at one price. Here's the first bonus tonight, okay? We're going to give you access to our entire library of classes. There are currently 94 trading classes in there. When I say 94 classes, these are full-blown classes, every class having detailed criteria, okay? There's nothing else like this anywhere, okay? At any price. You want to pay $30,000 for education? You go for it. Because I'll put what we have here, we charge $497 for this. I'll put what we have here at $497 against anything in this entire industry. Because wait till you see who our instructors are. By the way, we just added one. Okay? Today, we just signed him. Maximum returns for infinity spread. It's $497 class. That's archived immediately. Okay? The following classes, there's 94 classes. I'm just going to give you a smattering. Volatility back spreads, guide to survive and thrive, extreme volatility, small account growth with in-out spreads. This in-out spreads class, most prolific class we've ever done. Okay, the number of people that watch this is just phenomenal over the years. Black book spreads, how to collect income being short, the next big short. This is actually the risk twist class. Guide to selling high probability spreads. If you want to sell options premium, we're there. Iron condors, learn how to sell iron condors, selling premium and maximizing your risk. Okay, minimizing your risk. Apologize. Maximize returns, minimize risk. Okay, day trading NASDAQ futures. We have day trading classes, covered calls, essential skills for consistency in trading class, top 10 skills. People, if you name a genre, the point that I'm trying to make over here, if you name a genre of trade, we have a class on it. How is that possible? Because when we built TheoTrade, we knew what the model was here at TheoTrade. Okay, like if you turn on Netflix, you're like, I need a comedy tonight. We have that. Not comedy, okay? We have every genre of trade. If you say, I want to do pairs trading, good, we got that. Somebody says, I want to do swing trading. Guess what? Corey Rosenblum's your person. If you're into technical analysis, you kidding? Okay, we now have 4 CMTs on staff, okay? We're going to give you access to over $9,000 in classes alone. We give that to you tonight. You have access to every single class that we've ever done starting from 2016, and they're all viable. By the way, those classes, as I said, this is not a one-trick pony kind of place. Here's our instructors. Obviously, I am one of the instructors here. The other instructors, okay, let me introduce you. Jeff Bierman. Jeff Bierman, we actually call Jeff the professor. By the way, that's not a nickname. Jeff's actually a professor of finance at Loyola in Chicago. Some of you, for all I know, probably have had Jeff as a professor. Jeff, this is going to be his first semester at Loyola. He's now actually teaching graduate school there. So that's a little bit new to him. Jeff also worked with me at TD Ameritrade. Jeff was the chief market technician for TD Ameritrade. I always tell people you owe a debt of gratitude to Jeff Bierman and don't even know it. Jeff actually built over half the studies on Thinkorswim charts. Thinkorswim charts, half of the algos come out of Jeff Bierman on there. So he left. I left TD Ameritrade in 2015. He left 3 months after me. He's like, it's not the same, baby, without you. It ain't the same. He was actually one of the first people I hired right out of the gate. You know, next one, Matt Williamson. Matt Williamson's our market neutral. He's a premium selling option strategist. You want to know about selling options premium? This is your guy. By the way, Matt is also kind of a resident spreadsheet geek. So if you're like an engineer, if you're an analytical individual, torture Matt Williamson. Torture him with emails. He loves spreadsheets. Next on the list, Corey Rosenblum. Corey Rosenblum, he's our senior strategist. He's also our resident swing trader. For those of you aware of like swing trading, tick divergence and so forth, Corey's got phenomenal classes. In fact, Corey just did a recent class, okay? That alone is probably worth the $497 tonight easily, okay? Next on the list, Brandon Chapman, CMT. By the way, I don't want to pull away from the other guys. Jeff Bierman here is a CMT, okay? Corey Rosenblum is a CMT. Brandon Chapman is a CMT. Blake, okay, is a CMT. You realize how few CMTs are actually in, okay, the CM. By the way, people don't know like CMT, okay? It's an extraordinarily difficult, okay, market technician designation to get. We have 4 of them now on our crew, okay? No one has that. CMT is a really, really hard distinction to get. So Brandon Chapman, Brandon also actually came from TD Ameritrade. In fact, Brandon wrote the course curriculum, the educational course curriculum at TD Ameritrade. I'll tell you a quick story. TD Ameritrade used to sell a class. The class was 18 months long, and they used to charge, and I guarantee some of you took this class, okay? The course cost over $24,000 for 18 months. Brandon actually wrote the entire course curriculum for that. How do I know? Because Brandon actually worked in the education division, into which that actually led up to me, along with Jeff Bierman. Okay? So with that, Brandon Chapman will tell you firsthand what we do here at TheoTrade and what we do for literally $497 will absolutely blow it away. Apologize there. My pen's not working. So it'll absolutely blow it away of what we do here at at TheoTrade. Oh man, my pen froze over here. Bear with me here momentarily. I am going to get Mr. Pen working again. Yes! There it is. So, sorry about that. So Brandon Chapman. Next on the docket over here, we have none other than Slim Miller. For those of you that know a little bit about Slim Miller's been around in this industry for forever. I've actually known Slim since I'm a kid. Again, I grew up around traders, met Slim when I was a kid, and Slim, stock options, futures traders. Slim also has a couple of courses here at TheoTrade that emphasize the mindset. He's actually kind of our psychology and cyclical analysis trader. Put a lot of weight into Slim. Slim is actually semi-retired. Just moved down to Florida over there, but he's focusing more and more on the psychology of trade. It has helped our traders immensely, getting inside like their head. Again, as I said, we go out of our way here at TheoTrade to hire instructors, okay, from every genre of trade. By the way, somebody actually knew which course I was talking about for $24,000. Next in the list, Tony Rago, NASDAQ Futures intraday strategist. Just so you know what Tony does all day, he just trades. Tony calls out setups in the NASDAQ futures all day, every single day. It's phenomenal. I mean, Tony literally for 6+ hours a day is calling setups in there. They call, like today, over 50 to 60 different setups inside of the NASDAQ futures. Last, and our newest instructor here, this is the first time we're actually making this public, Blake Young. Blake Young also, okay, worked with us both at Thinkorswim and TD Ameritrade. His emphasis, market profile, futures, currency products. He's also a heavy commodities trader. Okay, you guys are absolutely going to love Blake. Blake is literally to sign with us today. This is his first official time being discussed over here. So yeah, people, we are now 8 full-time instructors deep. So the first bonus again we offer tonight. The first bonus is 94 trading classes. You realize with Blake Young on here, we're going to be stacking classes out. I mean, these guys, this is a crew unlike no other in this industry. Bonus number 2, okay? Bonus number 2 here, we actually, okay, we we give you 3 months, okay? 3 months unlimited access to TheoStream. So what's a TheoStream? It's everything that we do all throughout the course of the day, okay? And that basically means we trade live, okay? So when I say we trade live throughout the course of the day. We have a live chat room. So what we give you is an all-access TheoTrade VIP membership pass completely free. It's part of it, okay? So you go out and you pay $497, right? My pen won't work over there. $497. We actually not only give you 94 classes, but we also give you access to our live trading chat room. Now I recognize that not everybody can watch a screen. We broadcast for 6 hours minimum a day. Lately, we've actually been broadcasting literally from bell to bell. But the traders actually provide real-time trade ideas, and we take those trade ideas and we push them out via text notification or what we call push notification. That includes infinity spreads. There are 5 distinct trading portfolios. We have daily coaching sessions with timely topics and stocks, options, and futures. And, okay, and I'm going to put huge weight into this. This bullet point right here, we answer questions via email. You have 3 months access to everything that we do, every course that we've ever done. We will answer your email questions. If you emailed us one time, people, just one time, and I was able to save your bacon on email. And by the way, when it comes to emailing us, you do not have to go into the email and tiptoe with us. Okay. When I say that, I mean, you don't have to go in and email us and like, so I have a friend and my friend was thinking about doing this trade and this and that. Forget all that garbage. Email us. Almost every one of us actually comes from the brokerage background. We know how to answer trade and trade related questions. If you say, I'm bullish on this, this is the strategy I want to do, is this right? I'll say, no, it's the worst trade I've ever seen. Don't do it. Okay. You got to realize, okay, we have the capacity and the understanding, okay, of this business to say, yeah, you can do this, you can do that. So do not hesitate to email us. I put huge weight into this because I think that alone, it's $497 to be able to access this for 3 months on email. Okay, there's unlimited email access. I'm not going to say, don't keep emailing us. You can also talk to us in our chat room. Yeah, we have a chat room that you can, when I say talk to us, you can literally chat back and forth with us. We'll verbally answer you. It's access to another $1,000 support trades, okay, in Insight. By the way, all of this is archived. I know people look at this like, I can't watch 6 hours a day. Fine. Watch 1 hour a day on an archive, okay? And you could watch it at 2 times the speed because you can actually play back the archive at 2 times the speed. So everything is archived instantaneously. In addition to this, in bonus number 2, we're going to give you all of our indicators from day 1. You will enroll for this tonight, and you get every indicator that we do. Okay, you get access to 94 classes. You get access to our live trading chat room. And then people ask, well, oh yeah, I get it. That's why you have over 6,000, people that are now subscribing to TheoTrade. Some of the indicators, auto expected move. Listen, I'm going to give you in a moment the link to auto expected move. S&P 500 gravity points, RSI Laguerre, Quantix. I use Quantix every single day. NQ levels, which is Tony Rago. Next generation squeeze, position tracker, IV rank versus percentile, TheoQuant setup, unusual put options activity, SPX, expected move. There's a ton more. This is just a smattering, again, a smattering of some of the proprietary indicators. We do not charge for proprietary indicators. We're of the belief, if we're going to trade with this stuff, you need this stuff. Okay? People that trade for indicators, or charge, I should say, for indicators, are charging for indicators because that's their business. Our business is trading. Our business is trading and making sure that you understand precisely what we're doing. Okay? There's a third bonus tonight. We have a live class coming up. Okay? It's the next class here at TheoTrade. It's from Jeff Bierman. Live class, spring into action, tools to spot explosive moves. Jeff Bierman is going to go about a completely different methodology to look for explosive moves. Why are we looking for explosive moves? Because we're talking about infinity spreads. I mean, that's what brought us here tonight. We're looking at back ratio spreads and volatility spreads. Jeff Bierman, okay, said, I can take what you're doing with your trades, okay, and I can show compression in the marketplace. I can show when these explosive moves are going to come. So we're going to host a class, and we're actually going to host that class live. It's Tuesday, August 25th. Okay? Tuesday, August 25th. Listen, You enroll tonight. You still get to go to the live class. You enroll tonight. You get ready for the class. You start to learn about the infinity spreads. Then you're actually going to go to Jeff Bierman's class. Okay. He's actually going to host. It's probably going to run more than 2 hours. It's 9 a.m. to 11 a.m. Central Time. This class will be archived immediately with 24/7 access. Okay. Or you can download it on TheoTrade mobile, iOS, and Android. By the way, and this is in addition to the other 94 classes you recognize. Okay. By the way, there's another class coming up after this already that we're already planning. In the next 3 months, it's going to be incredible because we're coming into we're coming into season, people. Okay. Season. Ooh, yeah. September, October. Okay. We're going to light this marketplace up. Spring into action. This is actually the curriculum. How to evaluate different dimensions of volatility so you can trade with confidence every day. Identify and consistently apply a variety of volatility band indicators so you know which one to use in any market environment. How to interpret and position around volatility compression. That's what I was just talking about a moment ago. And expansion so you're ready for whatever the market throws at you. Discover how to integrate ancillary indicators with volatility bands, okay, to time explosive price moves so you can get in and out at the right time. When to exit explosive price moves to preserve gains, cut losses, so you can maximize your profits and minimize risk. This particular class, again, it's part, okay, of what we do here at TheoTrade. It's just part of it. You're a member of, of TheoTrade. It's $497. You're going to be here. You need to go to the class August 25th. If you miss it live, it'll be immediately archived. Like seconds after the class ends, we archive it for you. Listen, what we do here at TheoTrade, we include everything that you're going to need to invest and trade. We're going to do classes and coaching and email access to the instructors. And again, I put huge weight into the email access, live trading room and live trades, indicators and scans, mobile access. It's everything you're going to need to succeed. Like literally, TheoTrade has built the Netflix for traders, every genre of trade that you can dream of. Tonight, TheoTrade, it's $297 for 3 months. I want to make something clear before I actually detail any of this. I want to make something clear. It's $297 for 3 months. That is not a membership. It is a one-time charge. Again, we do not do memberships anymore. This is not a gym membership. We used to do that. You know what? People, they didn't like it. They go, oh man, listen, it's $297 for 3 months. This is not an introductory price. It's $297 if you enroll tonight. After 3 months, if you want to do it again, we'll ask you, do you want to do this again? You have to say, yes, I love this. Okay. You want to do it again? Fine. It's another $297. Okay. Now, this is not an introductory price. It's not a membership. We don't do that because we know we don't like it. We know you're not going to like it. Listen, this is what it includes tonight. Maximum returns with infinity spreads. The courses, it's all included in Total Theo. You're also going to get access to over 94 additional classes. Okay. You're going to get new monthly classes. Yeah. Jeff Bierman's class. Okay. August 25th. It's coming up. Okay. Literally August 25th. All right. Live trading chat room. We provide real insight, real trades, real-time market insights, real-time analysis. We broadcast live 6 hours a day. We're going to give you 59 proprietary indicators and scans, text, push notifications. By the way, you have to include, when you're enrolling tonight, include your phone number. Okay? Include your phone number. If you have a phone that can accept text messages, by putting your number down, it will push those text messages to you. Okay? There's 5 distinct portfolios. We have daily coaching sessions. Most of our coaching sessions are actually done by Professor Jeff Bierman. Okay? Timely topics and stocks, options, and futures. And our instructors directly answer your trade-related questions. It's $297. Okay? It's unbelievable. By the way, go right now to theotrade.com/profit. Now, I want to take you there briefly. Okay? Then I'm actually going to answer a couple of questions here. One of the things that I just saw somebody pop up here. Let me actually pull this. I want to pull this on the screen for a moment. Again, the web address, theotrade.com/profit. P as in Peter. Okay? R-O-F as in Frank. I-T as in Tom. theotrade.com/profit. One of the things that came up, somebody said, this might be a little complex. If you're brand new, you click Start Here. Start Here. It's all the basic classes. Okay. We have a member home, which is totally searchable. Okay. All the different archives available. But I also want to show you, okay, one aspect of this. Right? This is TheoTrade. And we say, like, this is TheoTrade. What does it look like? Let's go to the chat room. Let's actually show you a little bit about the chat room. Oh, apparently I have to log back in and back out over here. I do apologize. Okay. I've been logged out for, I'm going to log out and log back in here real quick. All right. So we'll pop you right back into TheoTrade. Okay. So we're processing right now. And while I'm actually doing this, I'm going to come over here to the member chat room. I'm going to say, this is TheoTrade. This is actually what the chat room looks like. Okay. Down below over here is where you can actually discuss. And there's literally over 6,000 members heavily involved inside of the chat room on a day-to-day basis. The reason I wanted to bring this to your attention, we're actually going to go here momentarily, okay, to TheoTrade, okay, and follow this, theotrade.com/profit. I'm going to answer a couple of questions in here, okay, before I do so, okay, we are going to, again, take you through some details and answer a few individual questions over here. Oh, great. Okay. Again, one of the ones that keeps coming up, it's not a membership. It's $297 one-time charge. Okay. By the way, I'll further it with this. We'll make it a completely riskless trade tonight. Everything you need to start trading from novice to expert. And again, when we say novice to expert, I already kind of prefaced this a little bit in the discussion, but novice to expert in this start here menu. Okay. In the start here, if you know nothing about this business, options 101, options, 201, options 301. I'll tell you what, if you have your experience, check this out. Order execution part 1, 2, and 3. I know people are worried about, am I going to, get my $297 worth? $297 to learn how to execute orders, okay, like you've never known before. I spent 15 years in the brokerage business. This three-part series will tell you every single detail about how to save, okay, money every single time you execute an order. It's huge. So I wanted you to know everything from absolute novice to complete expert, okay? Put a money-back guarantee. Trade with us over the next 3 months. If you're not completely satisfied, just email us support@theotrade.com. Provide us the details of your trades. Receive a full refund. By the way, we don't quantify, like, what does that mean? Okay. What does satisfied mean? Okay. Satisfied? We don't even define it. We have a couple of stipulations on here. It's just simply this. Listen, tonight we charge a whopping $297. Okay. After 3 months, if you're not totally happy, we'll just give you your $297 back. You have to understand it's not worth, time and a fight. There's only one real stipulation here. You have to trade live with us for the next 3 months. We do that because we say we have skin in the game. You have to have skin in the game. Okay. You got to do 10 trades, which we will do texting you the trades. Do 10 trades in any of the TheoTrade strategies. Remember, we have 94 classes, about to be 95 classes. Any of the TheoTrade strategies and criteria in the next 3 months. As I said, we'll even text you out more than 10 trades. Your initial account value must exceed $2,000, and you have to follow our criteria for infinity spreads. You can't make up your own criteria. The last stipulation, okay? You have to trade real money. You can't paper trade. This ain't paper trading, people. Listen, the only reason I put these stipulations on here, we didn't initially have these, and what people would do, okay, they would pay $297, and after 3 months, they would do nothing, and they go, I never traded, give me my money back. But that's not fair. It's not fair to us, okay? If you're willing to actually put forth a little bit of time and you're willing to trade, okay, if you're not happy after 3 months, listen, we want people here that are happy, and I cannot stress that enough. We will do what it takes. If that means working with you on email one-on-one, I answer emails. We just brought on Blake as a new instructor because the number of emails is getting a little heavy. I answer about 3-4 hours of emails a day, as do all of our instructors. Okay, we literally go through a few hundred emails in a day. That's okay with us. But if you're not satisfied after 3 months, just shoot an email to us. We'll give you $297 back. Listen, get into TheoTrade now. We're going to work with you directly. There are 30 riskless spots on the TheoTrade riskless deal tonight. And the reason that we do the 30 spots, I personally reconcile your trades. Okay. And you realize after 3 months, you've done 10 trades. Okay. I look at everybody's trades. It's a matter, obviously, there's one of me and, hundreds and hundreds of you. Send us your trades. Listen, the $297 riskless offer, it's never been available before with infinity spreads. Plus, you're still getting spring into action tools, okay, to spot explosive moves, the upcoming Jeff Bierman course. We're never given a riskless offer, okay, with infinity spreads and Jeff Bierman's live course. Obviously, Jeff Bierman's class hasn't even happened yet. You guys are going to love Bierman. This is one intense guy. I put a lot of weight into Jeff Bierman. That's why I told you guys it's like the first person I pretty much hired here at TheoTrade right out of the gate. Jeff's phenomenal. Again, he's extremely intense. So there are 30 riskless spots. I will let each and every one of you know, okay, when all 30 spots are completely filled. So I have no problem doing that. We'll actually let you guys know precisely when all 30 spots are filled in here, and I will answer some questions here. By the way, what our members are saying, Brian, this comes in March 16th, and I wanted to share this with you. Wow. Okay. I wanted to, let me detail again here. March 16th. You do realize that was in the middle, okay, of the most hideous crash since the Great Depression. Wow. I want to say thank you for what you do and what you've taught me in the last 2.5 years. I bought into what you taught about risk twist spreads, which is part of the infinity spread, and duration positions, and started to trade options almost a year ago. I missed out on the last market move up, but at the moment, my IRA is up 14.8% for the year. You realize this gentleman's up 14% for the year in the middle of the worst crash in recent history. What I've invested in TheoTrade has been so worth the money. Thank you, from Brian. Okay. All right, onward and upward over here. One more, Todd Summerall. Todd actually said, okay, don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thousand or more. You told me smash it or I was going to be in trouble, so I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want, and I did. It's Todd Summerall, okay? Listen, tonight, it's $297. We'll give you access, again, 3 months, access to everything, okay? Everything's archived 24/7. We 6 hours a day in the chat room. You can email us, okay? We also email you trade ideas, all right? And push notification and text out the trades, different portfolios you can follow, all the trading indicators and scans. The second bonus, we give you over 94 trading classes. There's classes on day trading and swing trading and technical trading, everything. The third bonus is going to be a live class coming up August 25th. If you guys follow me right now to theotrade.com/profit, I just want to detail something for you on here. Okay. First and foremost, again, the web address, theotrade.com/profit. At the bottom of this page, okay, is where you'll actually find the expected move indicator. Again, we promised we would give you that. So at the bottom of the page, the expected move indicator. Many of you, I want to detail once again, okay, this includes, again, 94 classes, the volatility crash course. But one of the most important things that I want to show you over here is when you click add to cart. Okay, when you click add to cart, when you're going through putting billing information on, it's critical to know this is a one-time payment. That's it. Okay, it's a one-time payment. It's not reoccurring payment. Everybody asks that 50 different times. By the way, you can actually pay $297 or you can pay 2 payments of $149. Okay, that's not why I brought this up. I brought this up to you guys, understand that it literally is. It's not a reoccurring, monthly payment. It's specifically, okay, $297 one time, and that's it. The other thing I wanted to bring up on here, okay, put your phone number in because that is how we will immediately add you to the text messages as we do, okay, our trades. So when we do the trades live, we'll actually text you out those trades. We actually had a couple of different text messages today that came out. All right. So again, it's theotrade.com/profit. I am going to come in here and I am going to answer again, theotrade.com/profit. Follow me to that link again for the auto expected move indicator. I am going to answer a couple of questions right now. I will let you guys know as you're enrolling for this, I will let you know, okay, the 30 spots, okay, that become filled and when those 30 spots are filled on the riskless trade deal. Listen, it's only $297, okay, but it's important to some people that they get into the riskless trade deal. So I will actually read off just your first name and last initial, okay, and let you know that you're into the riskless trade deal here momentarily. Let me answer A couple of generalized questions for you. Again, I put the address right at the bottom of this slide, theotrade.com/profit. I'm going to answer some general questions, and then we're going to come into some very specific questions. And I will do my best to get everybody, okay, everybody, everybody's questions answered, okay, in the order they're actually coming in. So hang with me here for just 1 moment. One of the first things that comes up, people always ask me, like, what do I need to get started? I think you need a laptop and internet connection. And right now, you don't even need a laptop. I'm actually, I happen to be reading this on my iPad, okay? So you can absolutely, if you want, you can have a tablet, iPad, or an Android tablet. That's fine. Listen, what we try to do here at TheoTrade is just give you everything that you're going to need to get started from novice to the most extreme trader. And one thing I want to bring back up for just a second, when I say some of the novice and, to the extreme trader, listen, okay, inside of TheoTrade, right, we have, different classes, and even show you what this looked like. If you go to the class archive, so this is the actual chat room, here's the class archive. Option classes, option newbie classes, technical analysis, day trading, stock classes, futures classes. As I said, every genre of trade. Okay, my kind of area of expertise is going to be option strategies. So I'm going to take you into the option classes. You have access to every one of these. Like, these are the 94 classes that I'm talking about. Butterfly's Guide to Weekly Returns. Okay, you want to know about option Greeks. Okay, this is the risk twist spread, how to collect income being short, selling options premium for a living. Guide to Maximum Edge Trading Earnings, back spreads, volatility crash course. Okay, then we come down to Gamma Irons. Gamma Irons, unbelievable class. Okay, that has been hot lately right now. Okay, Black Book spreads, which is Matt Williamson. People, it just goes on and on in terms of the class. This is just one genre of trade. And I want to reiterate, because somebody else came in there, you're like, I'm kind of new. Again, everything you need from novice. And a lot of people are like, I'm a little bit more, than a novice. I'm an expert. Believe me, we have classes. They're going to blow you away, what we do here. The other aspect is if you click on member home there, you can come in here. We actually built like a Google search engine inside of TheoTrade. You type in like in-out spreads, okay? Type in-out spreads and click search. Every single mention of in-out spreads anywhere, okay, is going to pop up. If we did a topic on in-out spreads, it's going to populate in here. If we did infinity spreads, it's going to populate in here. You can search anything that you want, okay? Literally anything you want. By the way, yeah, it's to clarify, it's $297 tonight. And again, it's a one-time charge. And yes, it does include Jeff Bierman's class. There's nothing that we hold back in here. In fact, every single detail of what we offer is in here. Also recognize, okay, you can actually talk to us. You could just ask questions over here in GoToWebinar, but you can also click right in here and chat with us. That's one of my babies. It's about 5 years ago, though. He's not such a baby anymore. So as I was saying in here, you don't need much to get started. A laptop, an internet connection, and or a tablet, okay? This is not a membership. We're not going to auto-renew or bill you again. That's about the 10th time I've said that, okay? We're now providing Infinity Spreads, a weekly video update. So we actually do, again, every Friday, a weekly update. And on the Friday, the weekly update, we just tell you what we're doing. All the different trades that we have on over there, okay? It's all in there. Again, it's important you guys understand that we continually will update you on Infinity Spreads. We also now do a video on in-out spreads and gamma irons as well. TheoTrade, the next thing people always ask, I can't watch this all day. We archive everything. What's everything? Everything. All right, every word that we speak, and you can actually play back the archives even at like 2 times the speed. A lot of people play back the archives on TheoTrade mobile, which is fine with us. If you want to watch it on a mobile device, that's absolutely fine with us. The mobile devices, our mobile apps are phenomenal. I love being able to do that because you can actually kind of zoom in, on the screen and so forth. It's great. Add your cell phone number when you're enrolling and you're going to receive the trades via text message. Okay, and download our mobile application for push notifications. Push notifications means you have our mobile application, then we actually push you out, okay, trades through our mobile app. Number 7 over here, you can email us anytime. You're going to receive a response within 24 hours. Just so you guys know, you can email us trade-related questions. as I reiterated earlier, and I'm going to get this question 100 times, so I'm going to say it. You can ask us about trades. You don't have to go in here and go like, my uncle's brother's mother's like dog had this idea. Listen, be forthright. Tell me what your portfolio is. Copy and paste your trade in there. Ask me, okay? Specifics. That's important, okay? That's important. Just ask specifics when it comes to trade-related questions. Don't hedge around it, okay? I don't work at the brokerage firm anymore, so I can't see your account. You know what you could do? Just take a screenshot and send it to me. It's good, okay? Number 8, you're going to gain access to every course that we've done in the previous 4 years. You're going to gain access to classes, to coaching sessions, live trading sessions. Every single word that we have spoken on TheoTrade since we started, it's been archived, okay? I mean, we have literally petabytes of data now, okay? That's no joke. We have petabytes of data stored over in the Amazon cloud, okay? All the trades that we talk about here at TheoTrade can be done inside an IRA, a retirement account, with as little as $2,000 within the account, okay? Number 10, at TheoTrade, we can help you get approved for options trading at several major brokers. So if when I say help you get approved for options, okay? When I say, what does that mean? Because some people don't really understand, okay? When I say get approved for options, there are brokerage firms out there that'll make you jump through hoops to get approved for options. Well, don't worry about it. If you got a problem with TD Ameritrade, we can help you out. Here at E-Trade, no problem, okay? But listen, we have, deals with several major brokerage firms, and, you should have no problem trading any strategy that you want to trade, so long as you have $2,000 in the account. Listen, okay, there are 30 riskless spots available tonight. Get results, take action, enroll for it. There's just absolutely no risk. The other factor is, listen, it's a whopping $300, and you will not go wrong here. You're going to be absolutely blown away at what we do, okay, for the price that we actually do it at, $297. Nobody can touch this, all right? And I just wanted to cover this one more, and then I'm going to go and answer some more questions. But I love this one because it says, by the way, you guys are rocking it. Very impressed. It's really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. Comes from David. I just love that one because that's exactly, literally exactly what we were trying to create. I'm going to go throw this back up here. In fact, I'll tell you what, I'm going to answer your questions now. Okay. I'm just going to go directly into the room, and I'm going to start to answer some of your questions. Again, it's theotrade.com/profit. So just click add to cart. And again, as I said, I'm going to answer some of your questions directly in here. As I do so, in terms of the riskless trade spots, Nicholas K. from Washington, Brett D. from California, Jeannie T. from New Jersey, Mark T. from Illinois, Paul S. from California, Don W. from Ohio, Eaton G. from Florida, Patricia P. from New York, Robert O. from Louisiana, Alan P. from California, Wiesel from South Carolina, Robert M. from Georgia, Alan B. from Delaware, Vonnie I. from Colorado. It takes me about 4 minutes, 5 minutes maybe, before I actually see your name appear in here. I think I just read off about 10, 12 names. All of those names have actually come through, okay, and you're on the riskless trade spots. So we have still about, and again, I can see people actually enrolling right now, but we probably have close to 15 to 17 riskless trade spots available. All right. Let me answer a few more questions, because almost all the questions, by the way, I don't know if you guys realize, we're answering them. Tony's in there answering them, and Matt's in there answering them, JP's in there answering them. So Jeff is in there. We're all answering your questions here in real time. So I'm actually going to just read a couple of these off that I thought were great ones. Don, what's your thoughts on Apple and Tesla split? Overvalued? Okay. It's outside the expected move, Brett. So let's talk a little bit about Apple and Tesla. First of all, when it comes to Tesla, the volatility for a lot of the strategies that we like to embark upon here at TheoTrade, people don't like to hear this, but I'm not here to always tell you what you want to hear. I'm here to tell you what's going to work when you trade. Tesla's volatility right now is not something that you really want to mess around with. The volatility is so extreme and so dangerous, okay, that Tesla, the volatility is so high that it's not exceeding its expected moves as often as you would think. Apple, on the other hand, actually, Apple is a very active candidate. Now, the split okay, the split specifically inside of Apple, that is not so much Apple. That has everything to do with the Dow Jones. Okay. Apple does not want to become a target within the Dow Jones because the Dow Jones is not market capitalization. The Dow Jones, okay, has to do with price. It's price weighted. So they had to actually split it to keep Apple from being a target inside of the Dow Jones. When I say a target, it's what actually happened to Boeing. And that can be explained in a little bit more detail. We've actually got a couple of sessions we've specifically done on that. So, by the way, Apple, it's going to hit a $2 trillion market cap in the next day or so. So be aware of that. $2 trillion market cap. By the way, a couple more individuals just came through in terms of enrolled. So as I was answering that question, Davey M from California, Juanita K from Washington, Michael O from New Jersey, Eliza D from California, Siad Z from Surrey, Richard H. from California. Again, there's a few more coming through here in the next couple of moments, but I'm just trying to hit a few of them. And again, we're starting to run out of some of the riskless spots in here. We'll see. Okay. Oh, here's a couple more that just came in. Ronald T. from Louisiana, Ben O. from Florida. So all of you, by the way, all the names that I've just mentioned are under the riskless trade spots. So I don't want anybody to be concerned about that because I can see a couple people. By the way, Jeannie was asking, what do you mean by riskless trade spot? So the first 30 people to enroll tonight, if you're not happy, Jeannie, after the 3 months, we just hand you your $297 back. And we do it for the first 30 people that enroll tonight. That's it. So I appreciate you asking that again. All right, let's oh, I love this one. The next one that comes from is from Mike. The next question, how do you show the P&L on Thinkorswim for the infinity spread that you had for IWM and the VIX? Okay. How do you actually do that? Okay. So Mike, it's in the setup of Thinkorswim. You go under application settings and settings. Okay. And you go actually into the monitor. Okay. And when you go into the monitor tab, it actually sets it up. It's in the application settings itself. It's under, okay, the monitor tab. Instead of actually looking at P&L open, you can actually put P&L day and percent. So I'd be happy to show you that. By the way, Mike, I'd be happy to show you that if you would like. In any one of the sessions, you hit me up on the session, and I'll actually I'll take you through specifically how to walk through and how to do that, because I use that all the time. That's actually a feature that again, when it comes to Thinkorswim, when it comes to like Tastyworks, okay, I know the platforms better than most. Thinkorswim, there's nobody that knows that platform as well as I do. I built a lot of the features in there, and I literally spent the last 20 years of my life on there. 15 years I was actually involved in development on it, so I can help. And we've got videos about Thinkorswim. We have videos inside of TheoTrade about how to use Thinkorswim, and I'm actually building videos right now on Tastyworks as well, and several other brokerage firms. So another one came through, Ross from Nevada. There are seven riskless spots currently left. All right, people, I think I've got most of the questions in here. I want to make sure that if I didn't get them, JP got you, okay, Corey got you, Matt got you. I mean, again, all we're doing in here is just trying to get as many as possible. Oh, you know what? I like this. I'm in Australia, okay? In Australia, okay, we'll give you the right brokerage firm to use. Email us. If you're in Australia, we'll give you the right brokerage firm to use. We have a couple deals even for Aussies. So I feel for you. I traded in Australia. I lived in Australia for 18 months. I actually went to school in James Cook University in Townsville and did my master's, honors degree over there. So I have traded at the Aussie Times. Okay. Oh, one more just came through. Drew B from Texas. So there's 6 riskless spots left in here. Fantastic. All right. By the way, somebody said I just signed up. Okay. But I did not get the auto expected move. Guess what, Robert? Just shoot an email to support@theotrade.com. We'll just give you the link for it, but we can actually show you where all the different indicators are located on the site. So we'll get you taken care of. We'll get back to you. Again, shoot us emails. We get a few hundred emails a day. We always answer emails within 24 hours. I always say this to everybody that works here at TheoTrade and everybody that comes to TheoTrade. Yes, we're broadcasting 6.5 hours a day, but email, it's the lifeblood of our business. Okay. Like, we love when people are shooting us emails and so forth. It's just part of it. Okay. Do you want to interact one-to-one with us? Do you want to interact in the chat room? We'll help you. Clients will help you. The instructors will help you. we'll do what it takes to help you guys out through the process over here. I want to thank everybody for coming tonight. Again, it's theotrade.com/profit. We only had a handful of riskless spots left. I can see a couple more people are enrolling right now. But again, I've run way over time. And I know a lot of you guys eat some dinner, whatever it takes. I'm going to sit here, answer a couple more questions. By the way, Coleman S. from California. So we're down to just a handful of riskless trade spots left. Thanks, everybody, for joining us tonight. Have a wonderful evening, and I'll see you. By the way, I broadcast first thing in the morning tomorrow morning. I start at 6:22 Pacific time. That's 9:22 Eastern Standard Time. I'll be live in the chat room for a full hour. We've got a completely packed schedule. Literally, we have 6.5 hours covered on a Friday afternoon. So thanks, everybody, for joining us tonight. Bye-bye.